Good morning, everybody. It is Friday, March 22nd, 8:44 a.m. I'm early. By 30 seconds. So I'm here. No one can say, oh, he's late today. No one can say, oh, he's in the bathroom. He's still sleeping. Nope. I'm here, 8:44 a.m. Thank you, everybody, for being here today. Today's Friday, and I think the vibe on Fridays, as we are continuing to build this market show, is kind of like more of a chill vibe. So, on Mondays, it's like, good morning. On Fridays, it's like, all right, good morning. We're here. We got through the week. Friday, March 22nd, we are here once again to talk and analyze the markets. Thank you, everybody, for being here. We got a lot of stuff to talk about, folks. Tesla, as you can see on the thumbnail, which I did mess up. I called it market close versus market open. And I changed it last minute. Low Watt says he got people engaged by the wrong thumbnail. Now we're all talking about it. Good marketing. That wasn't the intention, but yeah, I guess that's a good strategy. We got to talk about Tesla. As you guys saw on the thumbnail, Tesla is down 4% in the pre-market. Why is it down? Well, Bloomberg published an article that doesn't seem like it's that big a deal, quite frankly, but the market thinks it's a big deal, and that's Tesla's. It's around China sales. Tesla down 167. Entire market kind of fell in like markets were actually good at around 745, and then by 810 everything took a little bit of a dump. Everything's down like about 1%, 2%. So we'll talk about that. Got some macro news to look at. Reddit IPO shares have popped up 50%. We got to talk about Reddit and what's going on in the world of Reddit. Cathie Wood buys some shares of Reddit, and she buys 90,000 shares of Meta. I don't get it. I mean, I kind of get why she's buying Meta, but I also don't. So we're going to talk about that and discuss kind of her play there, along with Reddit. And then Lululemon and Nike. Lululemon got destroyed after earnings. Right now in the pre-markets, Lululemon is now down 13%. That's a lot. I did not know this company was worth $60 billion yesterday. They're going to open today worth less than $60 billion, but they have the same market cap as FedEx. FedEx is up 10%, while Lululemon is down 13%. So we'll talk about those earnings. And then Nike. Nike was kind of flat. They didn't have the best earnings either. It was kind of okay. We'll discuss that and see what we've got going on from there. Thank you, everybody, for being here. Friday, March 22nd. Here's the question of the day. What do you do for a living? Put it in the chat. We're going to read them off before we get into everything. What we do, where are you from? We do where you're watching from. Like, what are you doing when you're watching? What do you do for a living? I thought about this morning. I was like, that'll be an interesting question to see, what this community actually does and where we're all from. Thank you, everybody, for being here. Hannah, John, Trucker Rob, different person, digital content, Lyndon, Cruel, Michael Schaefer, Oak, what's up? Sanjay, Jason, Mr. Seymour Duck, Quarantine Quartet, Kim, Iceman, JJ, Midwest, Charles, Deepen, Matt, June, Ty Gordon, Jittery Hobo. Thank you all for being here today. Noodler, James, Jumbo Slice. Thank you for being here this morning. All right, let's see what we got. Mark says, I make money for a living. I love that. Oh, by the way, real quick, we also had some breaking news on Palantir. Goldman Sachs might now be using Palantir's software. I'll show you guys this morning what we uncovered for that. And if that's the case, then we got Morgan Stanley, Goldman Sachs, and I think we've had JP Morgan for a while time. So we got all three of the big boys. And I think we've had Bank of America for like a couple years now. So most of the big banks using Palantir. Deepen says, hey, Amit, I'm a Tableau consultant. I love it. That's amazing. Rumnath is an engineer. Michael Schaefer, he's in VC. I know you, Michael Schaefer. Thank you for being here. Awesome stuff. Felicia, let's roll. Thank you for being here. Tristan Reachel says, Germany, IT subject matter expert. I love it. James says he's a crypto miner. You might actually be mining some crypto in your basement, dude. You never know. People do it. Matt says he buys spreads. You're going to take my job, man. Brad says he's in contract remodeling. June doesn't enjoy life. She's retired. I love it. Benny, what's up? Good morning. Golden Eagle says he robs banks. Okay, good to know. Corbin, I weigh airplanes. That's really good. Maybe you need to take some of those skills to Boeing, and they need to figure out why these airplanes keep messing up. Lyndon says secret agent. That's cool. Kelly says I'm your princess. That's a cute one. That's it. Yes, you are, Kelly. That's the best job. That's the best job we have. I love it. Status says project management at Viva Wallet. Okay, so if you're in project management, is most of your day spent in Slack? I'm curious. Is that where most of your day is? Because I have project manager friends and they say most of their day is just like trying to talk to these engineers about the product vision, and they don't even want to talk to you because they're too busy coding. Like that's somewhat of the issues of being a product manager that you have to deal with. Adam says I'm a pet exorcist. Is that a thing, dude? Do we perform exorcisms on pets? That's insane. I think you're joking there, but if that's a real thing, that would be crazy. Harry K says, I work at Buckingham Palace, give people tours of the Rembrandts and the staterooms. I think that's a real job. I don't think you're joking there. I don't know. Buckingham Palace is like, is that where the Queen lives or something? Or not the Queen, but like the Buckingham Palace. Oh, it's like a cultural place where people go to. I know nothing about this, dude. I should know more about this. The King's official London residence. Oh, so it's like the White House where people are allowed to take tours of where the king lives. Interesting. Okay, very cool. Very, very, very cool. We got cyber insurance. We got a brewer of beer. We got so many people doing so many different things in the chat. Thank you, everybody, for being here. Friday morning. All right, let's get into the market open. So let's start off with Tesla. Tesla shares are down. Why are Tesla shares down? 166. You know what's so crazy, dude? We were at 178 a couple of days ago, literally 2 days ago. And the reason we were at 178, because the Fed, they didn't even pivot. They just like said what they kept saying, which is that we're going to get 3 rate cuts. And the market was like, all right, so we should front run and buy some Tesla. And then Elon had the Neuralink, announcement. And I'm not saying that impacted the stock, but it was, people got excited. People like, all right, Elon, yes, we love you. You're going to change the world, Tesla. And then Bloomberg puts out a nasty little article this morning. And it was not the best article. I'll bring it up right here. But the argument is that Tesla is trimming their car output in China because they simply don't have enough, the article is insinuating they don't have enough demand or enough of the logistical capabilities to be able to actually output as many cars as they were doing before. So let's read a couple parts from this article and see if there's anything important there. The U.S. car maker earlier this month instructed employees at its Shanghai facility to lower production of both the Model Y and the Model 3, the 2 vehicles Tesla makes in China, by working 5 days a week instead of the usual 6.5 days. And China has that 6-day culture. Then they say the production lines on the 2 11-5-hour shifts per day, which remains unchanged. Output has been trimmed starting earlier this month, the people said, and the staff haven't been clear indication on when production will go back to normal. Tesla representatives didn't respond. The car maker stock, already the worst performer of the S&P 500 index this year, slumped as much as 3.9%. And as you can see, Tesla car sales in China are decreasing from where they were before. With overall passenger vehicles in China increased 17% in the first 2 months of the year, and sales of new energy vehicles rose 37.5%. Tesla recorded a decline in shipments from the same period a year ago. Now, why is this happening? One of the reasons is because BYD is literally selling you a car for $10,000 in China. And if you can get a car for BYD, or an electric car from BYD for 10 grand, I mean, dude, it's hard to justify, going for a Tesla, especially if it's a native brand to you. Tesla relies predominantly on 2 models first unveiled before 2020 to compete in China. The company did update the Model 3 sedan and Model Y last year. Demand for electric cars has been slowing in China and major other regions, including the US and Europe. Tesla's factory on the outskirts of Shanghai makes cars both for the domestic market and for exports. So as you can see right there, Tesla is still pretty good at, putting out cars in China, but the competition is there and they're coming up. Now, the broader question is, does this deserve to tank the stock? I mean, it's down, 3% in the pre-markets. That's for Tesla, down 3, 4, 5% is kind of seeming like it's an everyday thing now. It'll go up 3%, down 5%. Now back in the 160s. I don't think this is a report that is something that it's so new that the market didn't know about before. We already know Q1 guidance is not going to be good. They didn't give Q1 guidance. We know that margins are not going to be great. We know that margins are probably bottoming, but they're still not the best. So on Finance Junkies a couple of weeks ago, Chris pulled up a chart. GM's operating margins are getting better than Tesla's. GM's operating margins are going up at like 10.2%. Tesla's is going down at 9.97. It's kind of insane that they're both obviously in different directions. Now, in general, Tesla's overall margins are better, right? Because they're a different business. They have other components to their business with energy, superchargers. But Tesla's gross margins on those vehicles are going down. And so we already know all of this is my point. We already know that Germany factory got shut down for a bit. We already know that BYD's competition in China. So all these red orders that are coming in on the right-hand side of my screen where people are selling in this 160 range, I guess the market's just scared now. Tesla got the nice bump to 178 and then fell right back down to 166. Meet Kevin sold out of his entire Tesla position, liquidated the entire 36,000 shares last week. And it's interesting because right when he did that, which I think was at that 169 range, Tesla jumped. I mean, it went down to 161, then it jumped to 178. And so, I mean, liquidating an entire position means that you think this thing is going to fall a lot further before you jump back in. To my understanding, he has not jumped back in. And so he's looking for around 150 to really get in. Do we get to 150? Every time I think it's possible to get to 150, I just remember that it's Tesla, dude. Like at the end of the day, people are ready to buy Tesla because it's Tesla. So, I mean, I guess the broader question is if people are ready to buy Tesla when it gets to these prices and people are ready to take advantage of the dip, how bad can it really become for investors to ultimately get scared enough to not buy the dip? I don't know. But an article like this on a Friday morning, Fridays, the market tends to sell off anyway. It doesn't seem like it's that big of a deal. It doesn't seem like it's going to be something that lasts for a long time, but it is something that is so annoying. Every single time Tesla gets some momentum, you get bad news. And the bad news is like, it's news that needs to be reported about Tesla's car deliveries and production. It's not like it's a hit piece or anything. It's just like, it's the reality of Tesla's business right now, which I, again, continue to believe 2024 will be an accumulation year for Tesla. I was just on that Twitter Spaces. I told you guys I did a Twitter Spaces yesterday. Brandon says, I admit it. I'm addicted to the market open. I see what you did there. I admit. You're not the first person to use that joke, but thank you, Brandon, for being here. It means so much to me. I was on a Twitter Spaces just before the market open, and on that Twitter Spaces we were talking about Tesla as well. And one of the key arguments that people kept bringing up was just like, BYD is real in the context of the Chinese market and how cheap that car is. You could say the quality is not as good as Tesla, but BYD is also collecting a ton of data on the roads of China. And with the cheapness of the vehicle, they're able to get a lot more data than Tesla is in China because of that penetration. Now, is that long-term going to hurt Tesla? I don't think so. Is it going to make it more competitive? Yes. Tesla at the end of the day is still the clear winner, but there are people that are starting to recognize that, BYD is a bit of a threat, at least in the context of China. Is this a dip to buy today? I don't know, dude. I don't know. I haven't bought the dip in like 4 weeks when it comes to Tesla. I'm kind of just, I'm kind of staying put and seeing like, let's see what we really get before I get super, super excited about it. Low 160s again. I think I would be excited, or like high 150s. Will I get that? Probably not. So I'm fine. I don't care if I get it or I don't get it. But if it does get there, I will deploy. I just don't think we need to get there, but we keep getting articles like this. Maybe we do. We'll see how it plays out. Apple is up when the Mac 7 is down in the pre-market. Yeah, Apple's up right now primarily because yesterday it got schmacked. We'll talk more about Apple in a little bit. Apple is down 9% year to date and Tesla's down 32% year to date. So both of those two, if those were your two big holdings going into the year when it comes to the Mac 7, out of the 7 stocks, if you picked Apple and Tesla, you're not doing the best. If you picked Meta and Nvidia, you're on top of the world, dude. If those were your two that you picked going into the year, you're doing well. Apple and Tesla. And one could argue Apple and Tesla. And it's funny, Dan Ives is on the Apple Tesla train. And then, other analysts are more in the Nvidia train. Apple and Tesla is like, you would think that picking those two wouldn't have you down almost 40% year to date. It's like, nope. That's what you got. Okay. Speaking of that Twitter Spaces as well, we were talking about the Reddit IPO on the Twitter Spaces, and one of the people in those Twitter Spaces before we started the market open, he bet big before the IPO, and he is up 48%. I'll tell you what he said, which was a really new insight for why he bet big on Reddit, something I hadn't thought of before. But here's CNBC's update on Reddit going up.
Huge debut for Reddit yesterday on the New York Stock Exchange with the shares up 48%. From the IPO price, which was also at the high end of the range. Julia Boorstin joins us now with more, and she's going to tell us definitively whether it's prospects for Reddit or just a hot IPO market. Which is it?
Well, look, I think it's a mix here, but certainly there was a lot of excitement for this stock yesterday. Reddit's designated market maker, excuse me, told me this was a picture-perfect opening for an IPO, with a ton of investor interest and massive volume. Over 48 million shares traded. That's more than double the stock's float. Now, Reddit CEO Steve Huffman telling me yesterday, quote, "It's just today and tomorrow we get back to work." So today, Huffman is grappling with some big challenges. First up, the FTC's inquiry into the company's data licensing practices, including its $60 million deal with Google, which Reddit...
Dude, why is the FTC and the DOJ investigating every company? They really have an issue with Reddit getting $60 million from Google to license the AI data, the data for AI training. Like everyone there's so many regulations right now. It's just insane around these companies.
has said is a huge growth opportunity. New Street Research says, though, that the FTC inquiry is a 5% overhang on its 54 price target for Reddit shares. Second up, stiff competition for digital ad dollars with larger rivals Pinterest and Snap, particularly with Meta, which had 50 times the revenue of Reddit last year and is massively profitable, while Reddit lost $90 million. And in the fourth quarter, their growth rate was about the same, despite Meta's massive size. And third, there's the question of what happens if Redditors turn against the stock. Many on Wall Street bets are already saying they have sold or are advocating for shorting Reddit stock. And fourth, Reddit said it sees a big future opportunity around subscription and the user economy, but that may take a while. New Street estimating it will be just a $24 million market by the year 2027.
I think you just said so. It's
Okay, so what's going on in the world of Reddit? As you heard right there, 48 million shares were traded, which is double the float in the opening day, which is kind of crazy. It seems like there was a lot of momentum. Stock was up 50%. I am up 5% on my one Reddit share that I bought yesterday for $46.40. So we'll see if that one goes up or that doesn't go down. But you know, we'll see how that plays out. That one share, I bought it just for the hell of it. I was like, you know what, let's just buy this one share and let's see how it goes. But overall, you know, it was a very successful IPO. Real quick before I continue, Laza says, can you send me a link to subscribe to your channel? Yes, I can. I am sending it to you right now, Laza. It is here in the chat. There's a big subscribe button. You can just click it right here. It's in the chat. And once you get it, just click the black subscribe button and then you'll be good to go. But even if you don't subscribe, if you're here on the Market Open every day, I'm sure YouTube will just like recommend the thing in the morning. So, but it's there. You can subscribe on the channel. Okay. So 2 things I listened to on the Twitter Spaces that I thought were really interesting. Number 1, Reddit is going to be profitable, I think, quicker than people think. So CEO Steve Huffman said, the back half of 2023 was actually profitable. So there's 12 months in a year. The first 6 months were not profitable. The back half of those 6 months were, which means they weren't profitable for 2023 net, but they were at the end of 2023, which means if that's any signal for 2024, they could be profitable by Q1. Quite frankly, they're only $90 million away. It's not going to be that hard to become profitable. So if that's one concern, everyone's like, oh, they're not profitable. Well, they could be profitable pretty soon, and that's going to be important for investors. Number 2, what's also really important, Powell's not talking right now. Oh, Powell is talking right now. Yeah, we'll pull up Powell in a little bit. I forgot where he's talking at, but we'll check in on him in a second. Number 2, and the other thing that's important about Reddit that I didn't think of before is so when I was on the Twitter Spaces, the guy who had a big position in Reddit who bet before the IPO, his argument was they have the most real-time data off of every other platform. And this to me kind of didn't make sense because I thought Twitter was the first place for real-time data. I thought, you know, maybe TikTok to an extent is more real-time, at least with like Gen Z where they're updating stuff immediately. His argument was no. People don't understand. Everything on TikTok or Twitter or Instagram is first on Reddit. And I think he might be right about that. Now, what does that mean in the context of investors? What that means is when models want to license data to be able to train, they need the most updated data. If you go to ChatGPT and you say, hey, what's blah, 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 blah happening in the world, they have to have the data and the models and the proprietary sources to be able to give you those answers, or else they search Bing and then Bing gives you some crappy answer. And it's like, it's not the best experience. Reddit, if it has the most real-time data at the fastest speed, I think that is a moat. Now, the problem is their user growth is not strong enough for me to get super excited about that. The advertising business, I don't think that can monetize that well. But if Google, Microsoft, Facebook, they want to license billions and billions of terabytes of data from Reddit because they have the most updated real-time levels of data, then there you go. That is a business model that Reddit can probably create, and that could be pretty substantial for them. So I don't know what that would look like long-term, but if that's true, that they're going to be profitable soon and that their real-time data advantage is more important than some of the other platforms, maybe trading at 10 times revenue or 13 times revenue, which at $50 is not crazy, right? Maybe it's a little excessive, but it's not insane. And as a result of that, that might be pretty exciting for shareholders over the long term. So that's the update we have on Reddit right now. Okay, Jerome Powell, let's see where he is right now. I forgot where he's talking. He's talking. Where is he talking? He's talking. He's talking at some meeting, dude. Jerome Powell live. Oh, wow. Interesting. Okay, so I mean, we're not going to watch the whole thing, but it's a Fed Listens kind of keynote that he's giving right now. It's basically a keynote with a bunch of. It's not like an actual event or anything. It's like a little keynote he's doing with a round panel of people. Okay, cool. He's just talking about how we transitioned the economy post-pandemic. So basically everything he said at the FOMC, he's going to say again in a much more relaxed way because there's not 50 million reporters asking him questions. That's what's happening right now. Okay, cool. So that's what we got in the world of Reddit and in the world of Tesla. Now, let's talk. So let me do a quick update on Palantir and then I'll move on from there. Vito Production says, hey, Amit, can you talk about AIP now? So my sources have told me that we will get a official announcement from Palantir today about AIP now. And so I'm going to refrain from talking about it because, quite frankly, I don't think any of us fully understand what this is. Originally, when I looked at this yesterday, I thought, okay, it's a like centralized hub of information for Palantir like use cases when it comes to AIP. Apparently, it's much more than that. And it's an actual product that they've launched. It's not just like a hub of marketing. And so there's going to be some updates later today from Palantir themselves on what this really is, what this product looks like, and how this might end up generating revenue for them. So I'm going to wait till we get that announcement probably in like the next couple hours. And then I'm going to make a daily Palantir video covering it and I'll cover it in the market close. But this is pretty exciting. Originally, I just thought, okay, it's a way for companies to be able to see how they can use Palantir in automotive, healthcare, aerospace, government, manufacturing, chemicals, retail, etc. It seems like there's more to it than just that. So we will talk about it a little bit later. Michael Schaefer, you're pretty close in the chat from what I heard. AIP now is going to become Palantir's app store for AIP, which is really exciting because when you think about Amazon AWS Marketplace and you think about the like literally millions of small businesses that are able to hook their portals up to AWS Marketplace and then be able to download applications, and then the marketplace takes a little bit of a cut, kind of like the App Store, right? Taking a cut of all these apps. If Palantir's AIP now can become a modularized version of different verticals within AIP and then offer it on the marketplace, and then people can immediately download and start using it on real data, that's going to be pretty exciting, right? That's going to be pretty cool. And I think that should lead to broader top line revenue growth. Didn't we already have this announcement during AIPCon? We had a version of this announcement. It was more so around boot camps and how they were going to kind of train an internal AIP on all the boot camps that they've done and be able to outsource that to customers. It wasn't an AIP app store that was coming out. This seems a little bit more official. So again, we're going to get a broader announcement later today from Palantir themselves on what this is. And once we get more clarity, I'll cover it. But it seems exciting, dude. If people can immediately hook up to AIP and download a product and start using it on real-time data, then that's exciting. And that's probably something that's going to be beneficial for client acquisition. Couple other updates on Palantir, then we'll move on. Goldman Sachs, EtherSquare found Goldman Sachs has a Foundry link. These links are, you can type it in yourself, gs/res.palantirfoundry.com/multiplash/login/all, and then you get a real link. So Goldman Sachs might end up working with Palantir, which would be very exciting because we already have Morgan Stanley, we have Bank of America, I believe we have JP Morgan. So if we get Goldman Sachs, then that would be important. UniCredit, we have one of the biggest banks in Europe as well. So financial services is definitely a moat for Palantir. And then one other quick thing I was going to show you guys, Accenture. I talked about this yesterday on the market close and on the Daily Palantir episode. Accenture did their earnings. They're a partner of Palantir. They're a sales distribution consultant partner that leads boot camps with them, helps them with the NHS rollout. They did $600 million last quarter in generative AI bookings. They're not selling generative AI tech. They're literally selling strategy and implementation, ideology, and sort of ideation and different mechanisms for companies to be able to implement generative AI throughout their entire enterprise. So my takeaway from this is that if a consulting firm that does not have the gross margins Palantir has is able to do $500 million in 90 days, more than $500 million in 90 days on the strategy and implementation of generative AI for clients, what could a tech company that's actually building the software that does have the 84% gross margins and the 34% adjusted operating margins, what could that company look like if they capture the market? So I think this is very bullish for Palantir, not only because Accenture is a partner for Palantir, but it shows that the market for AI demand or for AI information itself is growing, which means demand for the actual technology around AI, I think, will be growing as well. So it'll be exciting. It'll be super, super exciting to see how this all plays out. Deepin says, Amit, great video on Bitcoin yesterday with Fred. Yeah, if you guys didn't catch that, I talked to Fred Krueger, who is a very heavy guy in Bitcoin. He's sold multiple companies and he's developing a brand on Twitter, and he's He's big in the Bitcoin community. And the reason he's big in the Bitcoin community is because he makes a mathematical argument for Bitcoin. And some of the stuff we talked about in terms of logarithmic. Wow, why can't I say the word logarithmic? This is so embarrassing. Logarithmatic. Hold on. How do you say this word? Logarithm. I know how to say that. Logarithmetic. This was horrible. But the point is, there is a line from a logarithmic scale, even if I'm saying that wrong, that is very tight and almost a perfect line if you look at Bitcoin's price trajectory, which is really exciting because I've never heard of the mathematical case for Bitcoin. He was basically saying it's kind of spiritual. Like, this stuff doesn't happen on purpose. It's not random. And so when you think about all the constraints of Bitcoin, supply, demand, scarcity, all that stuff, and then the logarithmic, stupid, rhythmic, whatever that word is, line, it starts to give you a little bit more appreciation for what Bitcoin actually is. Here's Bank of America and their argument on what's happening with rate pivots. Let's get an update on the macro, and then we'll keep going from there.
Barrow, I was kind of so their 8-year an experiment you can do in an afternoon. Okay.
Why does this matter? So I'm a global fixed income investor. Just a few years ago, you look back in 2020, there was 18 trillion in negative yielding debt in the global fixed income market. And what did that do? That caused most investors to structurally underweight fixed income in their portfolio. And honestly, I don't blame them. Who's investing in negative yields? I mean, not me. That tide has really turned in the last few years, and there's finally yield in fixed income again. And I think that Bank of Japan decision is that last puzzle piece that's really bringing us into a new era of structurally higher income. And it's a better position for investors who want a 60-40 portfolio.
Can you tell me why we keep trying either wage or price controls after? I mean, when did we figure this out? That the market needs to set prices, or else there's dislocations on either side, and it doesn't. We tried it again. We tried it. I remember wage price controls under the Nixon administration, but now we're doing it with maybe drug prices. But when do we learn that why do we keep trying it again? It's going to work one of these times?
Well, for the Bank of Japan and the Japanese economy, they had a very unique situation. They were dealing with deflation, which is the ultimate #1 enemy of a central bank. And so that deflationary mindset, it can become very ingrained and very hard to break out of. And that's why they went very full force over the last many years to break out of that mindset. And actually, we can debate the efficacy of negative interest rates versus some of the other things that they did, but we are seeing wage growth in Japan again, which is a really different paradigm than we've seen in the past. Now, here in the US, on the other hand, the Fed is worried about too high inflation, too high wage growth, looking at those trends and how they're coming down. Japan is just trying to get into a more healthy price-wage dynamic.
So what she's talking about there is Bank of Japan. They made a pretty big decision a couple of days ago, which is to raise their interest rates for the first time since 2007. First time since 2007. Now, last time this happened, we had a recession. So, and the 2 times it happened before that, we also had a recession. So what she's saying right there is that Japanese wages are starting to go up. The Japanese sort of environment, which is the largest buyer of U.S. debt, has made the decision that we need to think a little differently about how we're stimulating our economy. The Nikkei index just reached all-time highs for the first time in like a decade. And so there's a unique structural thing happening right now in Japan that implicates the wages we see in the United States, but also the wage growth they see in Japan, which ultimately has implications for inflation. And obviously inflation determines pretty much everything in regards to how we have interest rates. So that decision this week from the BOJ actually had the markets kind of upset, or at least a little scared. But then you got the Fed saying we're going to cut rates. So Bank of Japan's raising rates. The Fed saying we're definitely going to cut rates. And so markets kind of had to balance the sort of duopoly of the fact that Bank of Japan hasn't raised rates in over a decade. And the Fed is continuing to reiterate that they're going to cut rates. And as a result of that, you get a market that's like, all right, well, S&P should be at all-time highs then, because if Bank of Japan's going to raise and the Fed's going to cut, then we probably don't have that many better places to put our money other than the market. And that's what we have going on right now in the broader equity ecosystem. I found a way to say the word. So I don't know if this is Google's generative AI or whatever, but I typed it in, and this is how you say it.
Logarithmic.
Logarithmic. I was saying logarithmatic. Dude, I am so bad at these words. I don't get it. Logarithmic.
Logarithmic.
Oh, wow. You can do a slow-mo too.
Logarithmic.
This is so cool, dude. I don't know if this is AI or something, or they've had this for a long time, but logarithmic. Logarithmic. All right, that's how you say it. Logarithmic. I was struggling so much to say that word. But the point is that Bitcoin episode was really interesting because the logarithmic interpretation of how Bitcoin has performed over time is just incredible. He also made a point that that I hadn't thought about before. Bitcoin has gone up over 10 million times. Like Nvidia's gone up 3,000 times. Tesla's gone up, I think, 4,000 or 5,000 times, right? In terms of how many percentage of returns you get from inception. Bitcoin has gone up 10 million times. And when you think of that, like that number doesn't even make sense. But that is something that is logarithmically. I'm so bad at this. I've tried to add the ly and I messed up. It is something that's kind of unique and a mathematical interpretation of Bitcoin that I haven't thought about before. Okay, let's talk about Apple. So Apple right now getting sued by the DOJ. Here's an update on that, and then we'll talk more about implications of this going forward.
Kind of a nothing burger. He thinks it's actually a buying opportunity. We also had some other insight. Former assistant AG for antitrust, Bill Baer, on our air yesterday, saying these cases, they can take years and years to unfold. I want to get your perspective. Beyond the short-term stock pressure, how do you see this impacting Apple's stock and its overall business?
This is going to be a multi-year headache for Apple. There's no doubt about that. These cases, they wind through the justice system and they require the companies to disclose lots of information, which is going to come to the public. Scrutiny on their business will take off some of the marketing sheen that Apple has done so well to show that it's on the side of consumers. Well, maybe it's not exactly totally on our side. And there's going to be, there might be a place where Apple says we have to settle, and that could cause further problems.
All right. So you think there may be a chance they could settle again. You're in the same camp. You think this is going to take years and years. I've heard some people say the DOJ is pretty much throwing the kitchen sink at Apple. They're kind of just going after everything. Merrick Garland getting very granular during that press conference. I was a bit surprised, referencing the color of text bubbles, the quality of videos that you're sending your friends, and just kind of the feelings you have when you don't have the right text bubble. Got very granular for a minute. How do you see Apple fighting back when the DOJ is kind of not only going after their business practices, but consumer sentiment? I mean, feelings. It's kind of a wide range complaint here from the DOJ and these other AGs.
Yeah, absolutely. Look, I was surprised to see Merrick Garland bring up, I think was part of the weakest part of this case, which is the green bubble thing. I mean, what has Apple done by locking in users on Apple Messages? It's given way to the rise of WhatsApp, which shows that competition is healthy. And that's how I think Apple is going to fight back here. They're going to say that competition is healthy, that they're not the only phone in the game, right? The DOJ had to make up a new category of performance smartphones. They got it to saying that Apple's 70% of the market. Well, that only bumped up 5% from the 65% of the market that they have without this new category. Of course, Android is a real competitor. And Apple will say, listen, there is choice in the market. If developers don't want to work with us, they can work with Android, but they keep coming back because they're making money here. Same with consumers. If their policies are so bad that they're making the product worse, then why do consumers keep buying? That would be the defense.
Alex.
Okay, first of all, this guy's brick walls are not better than my brick walls. Okay, there's a very easy comparison you can see there right on the screen. His brick walls have nothing on my brick walls. So for everyone saying it's refreshing to see brick walls, you get to see them every morning. Okay, even if there's a little bit of blue right there, that just ignore that blue. These are real brick walls. Second of all, I don't know if the DOJ has a good case against Apple, dude. I really don't. I mean, Merrick Garland, the Attorney General of the United States, yesterday said, people feel sad when they're excluded from the text message chain because they are not in the blue bubbles, they're in the green bubbles. If people feel sad, they should go buy an iPhone and get into the blue bubbles. Like it's not like there is no way you are suing a multi-trillion-dollar company off the idea that people feel excluded in society because they don't fit into the group chat. It's like, sorry, like Apple made a really good ecosystem for people to be in a group chat. Like is that the argument for how we get rid of Apple? Is that the argument for why Apple's a monopoly? Now there's a lot of other arguments, I would say. There's a lot of other arguments, but for them to get so granular on that was a little weird. Was definitely a little weird. So from that perspective, I think it was kind of not that interesting of a case. I was reading through the case documents last night, and I was listening to a little bit of the hearing of it. It feels like a joke, dude. Like there is a good reason to investigate Apple, But Apple is in no way going to take this. I mean, they are going to fight tooth and nail. The problem is they're going to spend billions of dollars doing this. And as a shareholder, this is a hang on the stock that's annoying. And it's, probably going to cause a little bit of downside momentum over the next few months as they try to figure this out, maybe even the next few years. But, and if Apple somehow loses this case and they have to kind of break up a little bit, that's just, it's gonna be a mess. It's what happened to Microsoft in the 1990s. And now Microsoft might ironically end up taking the top spot from Apple in terms of market cap because the DOJ is doing the same thing they did as Microsoft 20 years ago. I don't know if it's going to impact consumers. Consumers pick iPhones because they like iPhones. Consumers stay in the Apple ecosystem because they like the Apple ecosystem. The problem is everyone else gets screwed, and the DOJ is going to have to really prove how Apple uniquely is screwing other people if the consumer is still benefiting it. Benny says, I like Apple at 150. I agree. I like Apple at 150 as well. If we get there, that would be nice, but I don't know if we're actually going to be able to get down to 150. Now, 150, again, I think the valuation also becomes reasonable. Remember, Apple is at a 27 PE, and with Apple at a 27 PE, they're not growing enough to justify the 27 PE. So it's a question of do you think that growth is worth paying for? And I think at 150, 140, that growth becomes more reasonable to pay for. Here's a Santori Fund, Dan Niles, on why this suit is bad, but it's not a reason to sell the stock.
Impact of the DOJ suit against Apple. We are joined by Satori Fund founder and portfolio manager Dan Niles. Dan, great to see you. First of all, do you have a position in Apple right now?
Yeah, it'll be confusing to your viewers, but we're actually long Apple, but we're short a bunch of their suppliers because we think that Apple's got fundamental issues going forward, and we'd rather attack it through their suppliers right now. We're looking, hopefully, for a bounce in Apple tomorrow, just because I'm sure everybody who's loved this will come out and defend it, and hopefully we get a bounce so we can sell it and short it again. So that's kind of how we're thinking about it from a bigger picture standpoint in terms of our position.
I mean, you don't think that this suit is in any way something to factor in when it comes to your long position in Apple. There are a whole host of other reasons why Apple may have its own issues right now.
Yeah, I mean, so let me be clear about it. We dislike this stock fundamentally. We dislike it over the next year, et cetera. You asked me if I had a position in it. It's complicated, but yeah, we bought it towards the end of the day today. But I think if you sold
That's so funny, dude. It's like he's talking about his relationship. It's like it's complicated. They buying it just to short it. Like, it's hilarious.
this because of the DOJ, that makes no little sense to me because we've known this was coming for a while. They've already lost a lawsuit against Epic in Europe. The App Store rates have already come down. If you are selling it because it's a bad chart, totally understand. If you're selling it because the fundamentals have been poor for a year now, and it's catching up with the stock and estimates have been coming down for a year now, totally get that. But if you're selling it off this DOJ thing, which is going to take years to sort out, that makes no sense. And with the 2 standard deviation move lower, we're like, we'll buy it for a trade and rent it. And hopefully if it goes up tomorrow, we'll sell it and short it again.
Ruthless, dude. Absolutely ruthless. Dan Niles, he's been pretty bearish on Apple for a long time. And his argument is just like, look, if this thing goes up, that's great because I'll get a chance to short it, which is kind of the tone around Apple right now. Again, Apple and Tesla, the worst performing Mag 7 stocks this year. Let's get an update on equities and then we'll go to some macro news I want to show you. Bitcoin's falling back to 63.8, back under 64. Bitcoin went up to 68 yesterday. Now it's back here at 63. So Bitcoin's down, and that's bringing down some of these Bitcoin stocks down in the pre-market. Tesla down about 3.2%, 167. Google up a little bit. It's at 150 in the pre-markets. Coinbase down about 2.6%. Reddit is down 4% in the pre-markets. SoFi down another percent in the pre-markets. We talked about SoFi yesterday. Anthony Noto went on Cramer. I think he did a really good job. He said why they're refinancing their debt. We'll see if the market ends up believing him. I mean, SoFi did pop from that 680 level they were stuck at to the 750s, but we'll just see, where it goes from there after Noto has talked on Cramer. Apple 171 down up a little bit in the pre-markets. Robinhood 1875. They were at 1910 for the majority of the pre-market, and then again, kind of all stocks took a little bit of a dump. So 1871, they're down about 2% right now in the pre-markets. Nvidia 909. What will be very interesting about Nvidia today is can they maintain $900? They closed at 900 yesterday. It was a very healthy close in my opinion when it came to Nvidia. But it'll be interesting now if NVIDIA can actually hold this $900 level, because it's very fickle. People at $900 start getting scared and they sell off their NVIDIA. So if they can close a second day in a row above 900, right now down about 1%, 910 in the pre-markets, that's going to be bullish for NVIDIA. Snowflake 158, that's down. Unity is down. Microsoft is down a little bit. IWM is down. TFC is down a little bit. CleanSpark down 4%. Bitcoin's down about 2%. So all the Bitcoin stocks will probably be down. Marathon down 2%. Riot down 1.3%. Cypher down 2%. And MicroStrategy down 4.5%, down to 1526. Yesterday, I think it hit about 1650 as the market opened. Mag 7 today. Again, all of these guys are pretty much red in the pre-markets besides Amazon. Meta's the only one that's green. And Tesla, the one that's getting hit the most, down 3.7%. What is Jerome saying? He's tanking us. I don't think it's Jerome, dude. I don't think it's Jerome. It's not Jerome. Jerome's not at like a real conference. He's at like a dinner panel right now. He's not saying anything that's dramatic. I think the market's tanking just because it's Friday and people are taking profits, quite frankly. I mean, that's what it feels like to me. I don't think there's anything super coordinated here. I also checked to see if there was some macro news. There's no macro news. We got jobs data yesterday. We got CPI and PPI last week. We got unemployment a couple days ago. Like the only macro news I'm looking at right now is Japan inflation rate rises to 3-month peak. So inflation in Japan is getting up there. Germany's import prices are falling, which is good. And then United Kingdom retail sales fell flat in February, which is fine, but it's not that big of a deal. And then Canada has their retail sales edging a little higher in February, which is good for Canada. No other real macro news happened this morning. So it kind of confused me when I saw the market dump as well, but it dumped before Jay Powell started talking. So this just seems to be a continuation of people taking some profits this morning as well. Matt says, Amit, are you not interested in Enovix with 5 to 10x potential? Not really. I mean, dude, Enovix has a lot of time before they really can prove themselves. So it's a startup they did 40,000 in revenue a couple quarters ago, dude. Like, I mean, they're public to get financing, but they're not public to return value to shareholders. There is a difference between companies that go public to get financing, like a Enovix, like a SoundHound, I would say, versus companies that are going to return to shareholders. Now, I know SoundHound has returned if you got in really cheap, but in general, I think that they're to take advantage of the capital markets, not necessarily return to shareholders. There's companies like Meta that are there to actually return capital, right? Dividend, share buyback. So I think Enovix is there to suck up money, but they're not there to give you returns unless you're really going to hold it for 10 years, which is fine, but not that excited to hold it for that long. Benny says we ran up after a Jerome Powell speech on top of it being a Friday, so people want to take their profits. Yeah, I agree. I think this is actually pretty normal for this to be read in the markets today and people to take profits. The Tesla thing was the Bloomberg news, but everything else being read is just being read. S&P guys, 521. Also, let me show you a couple pieces of macro news and then we'll get into market open. And then after the market open, we'll talk Lulu and Nike because those were important things that happened. So a couple pieces of macro that I thought were really interesting around where this market is. So S&P 500 is up 10% this year, right? It's following a year that was up 25%. Pretty crazy. Take a look at this chart. When stocks fall in a midterm year, like they did in 2022, that's when stocks went down aggressively. Then we have very strong returns historically the next 2 years after, which is actually perfectly normal. So as you can see right here, in the midterm year from 1960 to 2020, stocks fell on average 12.4%, right there. On the year after, stocks went up 24% on average. The year after that, stocks went up 13.2% on average. I mean, this chart was just incredible. It just goes to show you how historic the precedents are in the market. Now, granted, the Bank of Japan historical precedent we looked at 2 days ago that said we get a recession every time Bank of Japan raises their rates. I don't like those charts. I don't want to look at those charts because those charts tell me bad things are happening based on history. So I try to avoid really focusing on those charts. But these charts right here that show you that in an election year, 2 years after the midterm year of a president, the market goes up on average 13% after being up 24% the year after it's down 12% on average. Those are charts I really like to look at. I really like looking at these charts. I mean, these charts are better than some adult films, quite frankly. I mean, these charts are incredible. So if we do end the year up about 14%, which is the median, we're up right now 10%. We have 4% more to go, dude. Like, it's not that crazy. And in 1992, we were up 20% on an election year. In 1972, 19%. 1968, 15%. And in 2016, 16%. Right now, we're only up 10%. This is all for the S&P 500. So maybe we have some more time to go. And if we do have some, in terms of room to run, and all the bears that are saying that this market has to collapse, and well, maybe history kind of disagrees with you in this scenario, given how specific it is. And, maybe there's a lot more room to run. And we'll probably get some dips in between, but I wouldn't be surprised if we end the year in a pretty normal spot, up 10 to 12% for the S&P 500. And we'll see where it goes. This is Finance Bro Astrology. Dude, yes, it's Finance Bro Astrology, but the level of data that people are looking at to be able to come to these conclusions, it makes you think, maybe it's not astrology. Maybe it's real hard empirical analysis. All right, 9:30 a.m. Friday, March 22nd. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. We are here once again. Thank you, everybody, for being here. And let's get into this market and see what we've got going on. S&P 522 opens up slightly red. Nothing too crazy, but it's down. Tesla down 3%. If you're just joining, Bloomberg put out an article that Tesla's output in China is decreasing rapidly, and China's 25% of Tesla's revenue. If that's not going well, then Tesla's not going to be going too well. Oatly down about 1.44%. Alibaba down about 1.83%. I was watching a documentary yesterday on China. I'll talk more about it later, but again, China is struggling, and Chinese stocks like Alibaba, even though they're grossly undervalued, are likely still going to struggle. Down 1.87%. Bitcoin, 64,000 was just at 63.8, so rebounding a little bit to 64. PayPal, 66.92. Wow, look at that green candle on PayPal. Look at that. Nice green candle on PayPal. Huge, 4 cents away from 67. Looks like PayPal wants to see 67. 66.98. Maybe we get to 67 today. We haven't got, wow, look at that breakout. Whoa, 67.10. Just busted through, dude. Okay, now it went right down, but it just busted through 67. We'll go back to it in a little bit, but we'll see. It looks like there's demand for these PayPal shares. 67. It's green on a red day. SoFi down about 1.26%. Snapchat down for the day. Amazon down a little bit. Arc Innovation 50.19. That's down. Meta 505. That's down. Coinbase, that's down 2%. 258. AMD 178. That's down as well. Netflix 623. That's up. Let's look at Nvidia. Is Nvidia up? Nvidia is down, but it's still holding 900, which is really good. Let's go to Robinhood. Robinhood is 1894. It was at 1871 in the pre-markets, looking like it might make its way back to that $19 range for Robinhood, where it was at pretty much all of yesterday, as it had showed momentum. Snowflake 158, Micron 109. That's up from yesterday, up about 10%. Celsius 91, Microsoft down from all-time highs yesterday, 429 to 427. IWM 208. That's up today. HIMS 25 cents away from $17. I looked at some people, or I talked to some people yesterday. They think fair value on HIMS is around 20. So, I mean, we'll see if that ends up happening. But HIMS right here is in this 1675 range. DraftKings 47.93, trying to make its way to $50. Truist 38.50, potentially making a run at $39 today. Regional Bank SMCI 962. It rebounded from 850 a couple days ago, but it is flat on the morning. Lululemon shares are down 14%. Makes sense. We'll talk about them in a bit, but their earnings were not good. Just not good, dude. I did not know Lululemon was a $60 billion company before the earnings yesterday, but they're not a $60 billion company anymore. They're a $49 billion company because those results weren't good. The guidance was just bad, dude. They beat on EPS and revenue, but the guidance was bad. And what they said was that the consumer may be weakening in regards to our particular product, which makes sense because you're selling, t-shirts for $78. People might not be able to afford it. PayPal 66.74. Pound share going down a little bit on the day, 24.37 right now. Apple 171 rebounding a little bit. DWAC, Donald Trump SPAC, that one is up 3%. We figured out some pretty crazy stuff yesterday on the market open around what Trump could do by collateralizing DWAC, which is going to de-SPAC next week. So we'll talk more about that. But that one is up on the day. Nvidia 915 as well is up. Target is up 170. Yeah, that one's been a big winner this week or this year. It's up 23% on the year. It fell really badly. It's like the 120s. So it makes a lot of sense that Target is is up right now. Benny says, Amit, did you see CleanSpark insiders sold loads of shares last night? I did not see that. So not the best sign for CleanSpark right before the halving event, but I guess they're taking profits. I mean, look, you can't blame them. The stock was at $2 a year ago. It's at $19 right now. So they're sitting on some hefty returns. Granted, as long as those insiders hold a decent stake, I don't know what the insider stake looks like. Probably shouldn't matter long term, as long as the halving event is successful for Bitcoin. But CleanSpark right now down 8%. Now, CleanSpark was up 22% yesterday. So not that big of a deal. That is down 8%. But again, if you're in this one, volatility is really the name of the game here. What else do we have? Boeing is up. Yeah, Boeing 190. That's up 2%. So Boeing is green, even with some of the issues they've had. Broadcom is up 0.84%. They had earnings like 2 weeks ago, and their earnings, they fell on earnings, but the results weren't horrible. So they're up 17% in the last 3 days. Yeah. Broadcom, they fell pretty badly right here. Let me look at the 5-day. Yeah, they fell to 1198 on March 19th. Right now they're at 1360. And they peaked at 1403. I mean, look, it makes sense. Their earnings were not bad. They were not in line with expectations, but this is another semis play in regards to NVIDIA, AMD, SMCI, Micron. So the market's eventually going to give them the benefit of the doubt a little bit later. What else do we have? SoundHound. Let's look at SoundHound as well. SoundHound 628. That's down another 6% on the day. Robinhood struggling a little bit, down about 2.46%. NVIDIA, that's up 916. Tesla holding 167. It's not going down as much as people thought it would as soon as the market opened. Staying kind of down at that 3% range. PayPal got rejected at 67 pretty badly, 67.25, all the way down to 66.84. The good thing is it looks like people are ready to start buying PayPal again, which hasn't happened for a while. So PayPal seeing some momentum. Apple is now red. AMD is red. SoFi is now red. Reddit, $50. Reddit's green. Incredible, dude. Reddit's actually green. Volume for Reddit already 2.3 million shares. Incredible. Absolutely incredible. Reddit has had a successful IPO. And again, yesterday we were on the market open. I felt they were going to have a successful IPO. The question is going to be, will this success last over the next 6 months? Because at what point do people just get bored of Reddit, or the shorts start to come in, or manipulation? I mean, we'll see. But IPO seems to be fairly successful. Market cap is $8 billion. They're doing about $1 billion in revenue. It's trading at 8 times revenue. Not that insane of a valuation. Top line growth, not the best at 20%. Price to sales at 9, a little bit pricey, but not insane. So now the question is just, can they keep up that momentum long term? And I think if they sign another AI deal with a company like Google, and they don't get, violated by the FTC for doing that, then that could be an additional source of revenue that would be exciting for Reddit. Enphase 113, they're down 1.28% right now. Peace Chess, thank you for the super chat. He says Raytheon had a similar manufacturing problem as Boeing. Stock dumped for a bit. It has recovered, and then some. Could be the same story for Boeing. Yeah, it could. I mean, look, people are ready to buy the dip. In capitalism, what I've learned is that when something is being sold off, there is another person that's looking at it as an opportunity. So, I mean, this is what makes the markets fun, right? When people sold off Palantir to $6, a lot of us were looking at it as an opportunity. For Tesla right now, people selling it off to 167, other people see it as an opportunity. So with Boeing, it's kind of the ruthless nature of markets. You can sell it. Someone's willing to buy it if they think there's a narrative. And if there's enough people willing to buy it versus then sell it, then you have a market, and you have an asset in that market that might end up going higher. So going to be interesting to see how the Boeing story plays out as well. Over the next few months as the FTC continues their investigation as well. Let's get an update on TikTok and what's going on. TikTok, if that's going to be banned. Cathie Wood bought 90,000 shares of Meta yesterday. There's two reasons, I think. Number one, either she's parking cash because her ETF's not allowed to hold cash, so she thinks Meta is as good as cash, or she thinks TikTok actually has some issues and Meta is going to be a big beneficiary of the TikTok ban. Here's an update on TikTok.
Fire in Washington. Our next guest has a unique view as a ByteDance investor. Joining us right now is Mitchell Green. He's Lead Edge Capital founding partner. And Mitchell, thanks for coming in today. It's good to see you.
Thanks for having me in.
So how big of a stake do you have in ByteDance? Can you tell us?
We don't get into specifics of our investment size, but it's like a pretty material stake.
How long ago did you get in?
We first invested, I think, 2 or 3 years ago, and recently bought some more.
Okay. And this is a company that has an incredibly rich valuation if you ask anybody on the street, and just what it's going to be worth. However, what's happening in Washington right now really throws this into an entirely new worldview, I guess. What are you thinking right now?
For me, it's funny, from a headline number, people would say 200 billion, 250 billion. The company was buying back stock at 270 billion. Well, that seems crazy. However, what people should remember is 2 years ago, 2.5 years ago, ByteDance is worth 200 billion, and Facebook is now, was worth 300 billion. Fast forward to today, Facebook is worth 1.3 trillion or thereabouts. ByteDance is worth 240, 250, 260 billion.
That's a bad argument, dude. Facebook only went down to 200 billion because the market crashed. So his argument is like, oh, Facebook and ByteDance were the same, and now Facebook's worth 5x. ByteDance is barely worth 20% above their 2022 lows, but the whole market collapsed. And Facebook in particular, they had the whole Reality Lab stuff. Zucks had to fire 20,000 people. Like, Facebook never should have been worth $88. Any competent investor knows that, but they ended up getting there. So I don't think that's the best comparison in the context of ByteDance.
Yet the companies are roughly the same size, when one's growing 3x plus faster. ByteDance is just an incredible business. What people in the United States need to also remember, so first, I am not a policy expert, right? But what people need to remember is ByteDance, TikTok US is a very small part of the overall business. It is an exciting part of the story for sure.
This is also a bad argument. If it's a small part of the business, no one would care if TikTok US got banned. The reason it's a really important part of the business is because US consumers have the most money to purchase on these products, on these like social apps. So they wouldn't be lobbying against it if it was a small part of the business. It's a really important part of the business, even if it's an overall small segment of the business.
But relative, it's not profitable. And just relative to the overall size, it's a very small part.
Okay, so you're looking at what happens in Washington as almost a non-issue, because even if the U.S. part is shut down or kicked off and sold, you're looking at ByteDance overall. But let's talk about the U.S.
Let's talk about the U.S. business for sure.
Because right now you've got the House passing a bill that says you either have to divest or ban it. The Senate just received intelligence briefings this week, and the senators who came out of it said, wow, this is a really concerning situation. So it probably is more likely to get fast-tracked than it was at the beginning of the week.
It is going to make a lot of great news headlines for the next many, many months. I think there's a lot of different ways you could see it playing out. In one way, it actually, for like a potential prospect future IPO, whenever that is, a ByteDance, it actually would probably help settle some news. You would know or not know. You would just uncertainty about it actually going public. I think let's just say the Senate tried to say they voted. That's long uncertain if they're going to or not. I know a bunch of senators have come out and said, listen, maybe we should actually be looking at more like children around social media for all these websites.
Yeah, but I will say, anybody who's on the Senate Intelligence Committee, a lot of other people have said the ways that they can mine your data and spy on you are eye-popping, and they are more shocked the more they hear about these things.
What I will say is if the U.S. government is going to try to force a Chinese company to sell it, they better be prepared for Yum Brands and McDonald's and Apple to be thrown out of China. And because it's going to be tick for talk, right? And so I think this is going to be.
I mean, I understand that.
I think this is going to be a very
national security is a different issue.
Yeah.
And if you really think it's a national security threat, I can see them throwing it out. I understand your point.
Okay, two things there that I think are really important for TikTok, and then we'll discuss the implications on that in the context of Meta. So number one. Let me just address that McDonald's point that he made real quick. So his argument is, okay, if the U.S. bans TikTok, then China's going to ban McDonald's. That documentary I was watching on China last night, I was really surprised to see that there are U.S. brands that have a really big presence in China, not just from a manufacturing perspective, which is what everyone thinks about, but Starbucks has like 20,000 stores. Pfizer's big there. McDonald's obviously big there. KFC is bigger. Like there's a lot of big U.S. brands. I know they don't allow the social media companies, but other companies that just sell like hamburgers, they're big in China. That's a big market for them. So his argument is if we ban TikTok, the China is going to ban McDonald's. This is a bad argument. If China tries to ban McDonald's, their economy is already collapsing. All right. McDonald's is cheap food. It's easy food. It's accessible food for the average Chinese consumer. China is already having a massive unemployment problem. So if you take away cheap and reliable food, much less the tax revenue you're getting from one of the biggest food chains in China, that would just be a dumb decision for your own economy. Now, if China wants to nuke their own economy like they've been doing, they can keep doing that. But that's not going to hurt McDonald's more than it's going to hurt China. McDonald's is going to have, a blip. I mean, they're going to have to adjust to it. By the way, if China invades Taiwan, I don't even think McDonald's is going to be able to stay in China. A lot of other brands are going to have to deal with that. So this idea that if you ban TikTok, China will ban other companies. First of all, they've already banned other companies. Second of all, they can't ban the consumer brands that are there because they're going to be nuking their economy to a massive extent. So I don't think that's going to happen. And TikTok's a national security issue. McDonald's is not a national security issue. So I think that's a little bit different there. Crowd Control says, hey, no TikTok, no Big Mac. Exactly. Number two, and this is what I'm really starting to realize as I get older, and I think everyone probably will agree with this. If your incentive is to make money, you don't care about anything else. Why am I saying this? This guy here is an investor in ByteDance. His incentive is to make money. I was watching Brad Gerstner's podcast yesterday with Bill Gurley. Brad Gerstner, we all know him. He's the founder of Altimeter Fund. He had a lot of good takes on Google and Tesla and all this stuff. He's a tech guy. We all in podcasts. He's big in the community. He's an investor in ByteDance. And yesterday they did the TikTok segment. And Bill Gurley, who's kind of anti-China, he was just like, so what do you think? And I watched Brad Gerstner squirm for 8 minutes. I mean, go watch it if you don't believe me. Brad Gerstner was squirming. The amount of times he said, I was like, yes, I know, but you're using this as a filler word because you don't know. You don't know because what is he going to say? He's making a lot of money off this Chinese app. He's an American patriot, but at the end of the day, he has a fiduciary duty to his investors and his fund to make money. So when I saw Brad Gerstner not be able to coherently say this is a national security threat and we should ban it because if we ban TikTok USA, TikTok's $300 billion valuation goes to probably 100 because the USA is the best market for TikTok. It just made me realize people want to make money. That's it. They only care about making money. And so whenever you hear someone kind of talk like this, including myself, everyone has their own motivations and their biases. I try to be as objective as I can and try to look at both sides of things and really present it, hopefully in a good way with a hint of personality and of course humor, which is why you're all here. But anyone who's an American investor who's invested in ByteDance, they are not going to want to ban TikTok USA because they know that's going to ruin the entire value proposition of TikTok. And so I think from that perspective, I don't think this thing is going to get banned. I think there's too much special interest controlling TikTok that wants to make money off of it. And investors care more about their money than China as a national security threat. You can think that's good. You can think that's bad, but it's true. And I think what we saw from Brad Gerstner yesterday kind of proved to me that that's definitely true. Eric said, Ian says, Amit, when does the humor start? That's mean, dude. That's very mean. Alex says, Amit, you look good in black. I appreciate it. Kelly says, agreed. Thank you guys. I did say yesterday, Joe from You is the guy I want to look like when I grow up. I think he is the sexiest man on planet Earth. So we'll see if I can get there. But he wears black a lot as well. So that's maybe I'm channeling my inner Joe. Okay, let's get an update on Lululemon and Nike. Why are those shares tanking along with FedEx? Let's get an update here, and then we'll talk more about what's going on with the lemons.
Under pressure this morning. That Dow component reported better than expected profits, but there was some weak guidance for the current quarter and for fiscal 2025. That's been pressuring the stock, which is now down just over 6%. In the meantime, Lululemon shares are also sliding. Actually, they're getting punished pretty badly. On weak guidance and slowing growth in North America, that stock is down by 12.5% this morning. Joining us right now is an analyst who covers both stocks. Randy Konik is Jefferies Lifestyle and Growth Platforms analyst. And Jefferies, Randy, it's pretty easy to look at this and say, okay, this is a sign of a slowing consumer. You are looking at these two different stocks as two different stories, though. You're downgrading Lululemon this morning, but you're maintaining what you see with Nike, where a little disappointing, but you think that they can make some improvement. Why don't you speak broadly about the consumer first, and then why you see this as two different stories?
Yeah, look, first of all, thanks for having me on. But look, the consumer, I think, is okay for now, but the consumer's more erratic. Their shopping patterns are more episodic, and they're just becoming more price sensitive. So, while the economy is okay for now, it's clear that under the covers, the consumer is just getting more difficult and more choppy. So as it relates to both Lululemon and Nike, I think there's two different problems here. First, with Lululemon, we didn't.
By the way, Reddit down 8% right now.
Downgrade it today. We've had an underperform rating. I think we're the only sell rating on the street. And what we've seen as a concern for Lululemon is just lofty expectations that the street has built on the buy and sell side into perpetuity. Apparel companies don't last forever in terms of their brand momentum and brand heat. And what we had noticed with our work going back beyond a year is that competition was starting to rise in the athletic apparel space, particularly companies like Alo in the East Coast and Viore out on the West Coast. And with the rise in competition, we thought what would happen is Lulu's great numbers wouldn't last forever. And we're starting to see that now. That's the Lululemon problem. As it relates to the Nike problem, I think what Nike's going through is an identity crisis in a way. They're making a lot of management changes, or they've had. They went through a restructuring. They've acknowledged that they need to improve their product innovation, which has been lacking. And this has been a movie that we've seen before with Nike about a decade ago when their product innovation pipeline stalled.
So his argument is Nike's not innovating and Lululemon has a lofty valuation. I agree with him. And that's why we're seeing Lululemon go down. Boeing right now up 2.24%. Lululemon, dude, valued at $60 billion. Again, I didn't go deep into the numbers, but that wasn't good. It's down 17% right now, dude. It went from 480 to 400. Like, talk about, dude, if you had puts on Lulu, your puts printed, absolutely printed. And maybe this was an obvious one to have some puts on. I never took it too seriously. They got into the S&P 500, which is why a lot of people in December were very excited about Lululemon, because lifestyle kind of consumer, direct-to-consumer brand. It was exciting for people, but $60 billion? I didn't even know their market cap. If you had told me Lululemon was worth $60 billion, I would have been flabbergasted. I've been like, really? Is it worth $60 billion? But there you go. That's what you got right now, down about $12 billion in market cap. And again, Nike, let's see where Nike is. They were up a little bit after hours. They are down. Wow, they're down 8%. Holy crap. This is not what we saw yesterday. We saw them down we saw them up 0.57% at the time of market close. That was like at 6 p.m. Wow, the street really. So Nike beat on EPS and they beat on revenue, but it was very slight, the beat on EPS and beat on revenue. Guidance was okay. Guidance was not amazing. So after hours yesterday, the street was like, all right, we'll buy up the stock a little bit. And it was up 0.5%. I did not know they'd be down 8%. So I was right. I was right about Nike. I thought Nike would tank, and there you go. We got it. We got to tank. And again, I don't even know the Nike's numbers. My only reason I thought Nike would tank, I didn't short it. I don't have puts or anything. I just thought the brand's getting boring. And as a result of that, I was assuming North American sales were going to slow down, which is their most profitable region. And that wouldn't be good for investors or good for the stock. Nike gets more attractive to me at 75, not at 92. It was at 92 like 90 days ago. So it's basically got back to where it was. $140 billion market cap. You got to ask yourself, what are you really buying when it comes with Nike? On. Let's go to On. That's the shoe brand. They're down 2.4% as well. One of the analysts actually talked about On being a competitor to Nike in terms of taking away market share, even if it's small market share. So that's another thing you got when it comes to Nike, with all these different consumer brands popping up and taking a little bit of market share from them. SoundHound down 8%, CleanSpark down 9%, Robinhood down about 4%, Nvidia's up. Interesting. Red market, Nvidia's green. PayPal 66.61, Google 152. Wow, Google's up 2%. Google's green. Google's actually green. Kathy Wood did buy Reddit. That's correct. She bought 9,000 shares, which is either a good thing or a bad thing to you based on what side of the aisle you're on when it comes to Kathy. Reddit down 8%. I'm officially down 40 cents on my one Reddit share. So I am bag holding now when it comes to Reddit. Wayne Johnson says, Amit, explain why a stock goes down when people sell, because surely there's someone on the other end buying. So why is it considered a sold stock and not a bought stock? There's more people selling than buying, right? That's why it goes down. So like that's why you need people to buy, right? So like Reddit right now at 46.27, there are orders that are being filled. On the right-hand side of my screen, you see these orders coming in. There are people buying it at 46 and there's people selling it at $46.07. And if there's more selling pressure than buying pressure, the stocks, it's basically around the bid and the ask, right? What is the least someone's willing to bid for a share? And what is the least someone's willing to take to sell a share? That market ends up being made on the seller and the buyer side, on the demand side and the sell side. And then boom, you get a stock price. And so when stocks go up, we get more buy side than sell side. Reddit right now, 46.65, going down 7.5% on the day. You're still doing good if you bought it on the IPO at 34, if that was your allocation, but it is down if you bought at the top at 55. SoFi 735, Accenture 344, Coinbase down about 3.24%, Apple 170. They are now red. Apple potentially seeing that 165 level. And we'll see where this continues to go. We're getting a call from a contributor to the channel, Mr. Chris Patel. Let's see what Chris has to say. Chris, hello. You're on the Market Open.
Hey, man. I'm watching. I know. I just want to make a real quick comment while everyone is here.
All right, go for it.
I think right now, Jerome Powell has really set the stage up for a nice recovery in real estate. Pretty much, there's a lot of great real estate on sale right now that a lot of people are overlooking. And I think it's time to start buying into companies that have real estate assets or, and here's the better one, access to capital that can buy up real estate super cheap. So if you remember 2008, you know, the people that really made a crap ton of money were all the people that had the money to buy up all those houses.
Right.
The same thing is happening with real estate right now. So I would say it's a good time to start looking at real estate, but you got to be very, very specific. You can't buy just any old real estate. You have to be very careful. As an example, look at SL Green. SL Green is up 150% since we spoke about it. So, you know, and there's still a lot of great companies out there with great high quality assets that are on sale right now. So, you know, I know a lot of people are focusing a lot on tech, on some of the other more growthier sectors, but right now is the time to pretty much start a pivot. And I know that you don't have that much exposure to real estate, but I think it's time to get some exposure to real estate, brother.
And that would be through REITs, essentially. That's the way you like access to these things.
Not just REITs, but there are other other instruments that are out there that can provide returns that are like that. So some people provide financing for real estate. Some people provide equity. Some people provide even just transactional, like, what is that thing called? Like buying and selling. So
right.
The real estate market is more than just the REITs. So I say, you know what? Let's start looking at that, especially when rates are coming down. When interest rates go down, it's a fundamental fact. Asset values go up. That's it.
Chris, while you're here, let me get your thoughts on a couple things. The Fed, we haven't spoke about it yet. Those 3 rate cuts, the market rallied on that because it seems like they were expecting 2 cuts instead of 3. So they expected the Fed to reverse. The Fed didn't reverse. Do you think it made sense that Jay Powell kept the 3 cuts?
I think what it is he is just trying to basically project out that we are going to have a soft landing. So he's got to keep that scenario going. The last thing you want to do with right now in this very vulnerable economy is come out with some really bearish news, which to me, I don't know. I from what I'm seeing right now, there is a slight reacceleration in inflation. But once again, I think these guys are just saying, "Hey, it's going to be transitory." In which case, we'll start to see like what is that thing called? We'll start to see disinflationary effects start taking a bigger chunk out of the inflations going forward. So I think right now what we're seeing is a slight increase in inflation, but the Fed is doubling down in saying that, hey, it's probably just transitory. And I actually do believe that, primarily because I'm looking at home prices, I'm looking at commercial real estate. There is a lot of bottoming out that's happening in at least in residential. You're starting to see the return of price cuts, which you definitely didn't see over the last couple of years. And every time the Fed lowers interest rates, that's going to drag more buyers into the market. But what's more important is there's going to be a subset of sellers that get into the market as well. So if someone asks in your question, in your comment section, well, how come stock prices go up and down? You know, if there's buyers and sellers, well, that's how the market works. And it's the same thing with real estate. The only difference is the supply and demand picture is way more limited. So I say right now, it's time to start looking at real estate. Real estate has not gotten the same love that other sectors have. But once again, you just have to open up any modern economics textbook and they'll tell you one thing. Interest rates go down, asset values go up. So
okay, quick rapid fire on some stocks and I'll get you out of here. NVIDIA 920. Does it make sense to you or no?
Long-term growth potential is definitely there for Nvidia, but I think they're having a Cisco moment where there's so much demand that's been like basically brought forward. So I think Nvidia for the next 5 years underperforms primarily because the stock price, I mean, the revenues and the profitability and everything is just going to catch up to its valuation. So
Okay,
yeah.
Apple 170. Is it starting to look attractive based on the DOJ lawsuit?
Apple's always attractive. It just depends on the price, but right now I think it's more attractive than it was a month ago. I think a lot of people are underestimating the total number of growth of cell phones that India is going to have when it comes to the Apple ecosystem. India is a big country with a very much untapped potential for the Apple ecosystem. Indian people love iPhones. I mean, how many cousins get, like, if you're going to India in October, so how many people are like, oh, get me an iPhone. So, just letting you know, tons of people love iPhones. And if you look at iOS market share, it's actually growing. So even if sales are going down because people are holding their phones longer, Apple service revenue is going to keep growing. So long term, Apple doesn't have anything to worry about, still generating tons of cash flow, still buying up a ton of shares. So all this short term up and down, I wouldn't worry about it much.
Regional banks, Truist is up, but the banking ETF is still down. KRE, what's the divergence happening there?
Because Truist has really good assets. Its insurance business, as you know, is being liquidated. This thing should be worth $45 very easily, which is the target that we set out a year ago, and which is why you are up 100, almost 200% on your TFC spread at this point.
Yeah.
So Truist is one of the best regionals in the regional stack. So they don't have exposure to the commercial real estate, like second and third tiers commercial real estate exposure that some of these other regionals do. And they have really great assets, and they have a lot of room to cut because a lot of the synergies in terms of cost efficiency, they weren't applied last year. So you remember, this is a merger between SunTrust and BB&T. A lot of those costs are now being taken out of the system, which means that profitability is going to get higher and higher. And with the vulnerability, with rate cuts oncoming, once again, our thesis on AOCI losses going down and the stock price going higher is starting to materialize. So there we go.
All right, I got two last ones for you. These are fan favorites. Palantir 24.25. You still think it hits 21, or you think it can make its way to 30 by July?
21.
Okay, 21. That's what you got it.
I'm sticking to it. But then again, Palantir's always been my Moby Dick. I love this company, but it's my Moby Dick. It always. I'm like Captain Ahab, willing to go down with the ship with Palantir.
Okay, SoFi 734, bottomed at 680.
SoFi's just a bank.
Hold on. Noto went on Kramer and he said why they refinanced the debt. You're a smart guy. You know they didn't refinance the debt in some malicious way. Do you think the stock deserves to be here?
Yes.
Really? You think it deserves to be at $7?
Yes, because there's not really anything that's differentiated about them or their product just yet. So, I mean, I get it that they're there, but dude, there's 1,000 other banks with higher profitability metrics. So everyone's like, oh, look, so if I just got profitability, okay, well, every other bank right now is profitable. So what do you really have going on? Right now, SoFi does not have a differentiated product that sets them above everyone else. And the other problem that SoFi is going to run into is that every other platform is catching up in the digital banking space. So whatever moat that they might have had in just being a plain digital bank, all of that is getting dissipated. A lot of other companies are investing heavily in their tech stack. So eventually, whatever moat that SoFi had with technology is being, I don't even think they really had that big of a moat. I know a lot of people keep saying Galileo. So every time I ask them about it, they're like, oh, it's going to be a big thing. And I was just, Technisys, that's going to be a big thing. And then I was like, all right, dude, whatever.
All right, actual last thing, Tesla. It's down on some Bloomberg news about China cuts. You still think 150 on this one?
Yeah, easily. BYD, man, I'm telling you, they're undercutting Tesla, not just in China's home market, but across Europe and Asia. And those are areas of growth for Tesla. So it just goes to show that future demand is going to be impacted. And even though Tesla does have some other assets that they can rely on for cash generation, the auto segment is still their largest revenue driver. So for now, in the short term, Tesla, I'd say be very careful. BYD and all these other Chinese manufacturers, they are dumping cars, EVs on the market like there is no tomorrow. So I say to anyone who's holding Tesla, good luck. But and I am definitely a buyer of Tesla, but not at these prices with the current macro conditions. Once rates go down, actually go down to a point where things start to become really affordable, that could be something. But there's also an automotive apocalypse that's happening right now. I am actually this weekend going to be buying a Mazda CX-50, and the rates are amazing. I'm getting a 2.9% interest rate for 60 months. You know,
wow,
freaking, Tesla compete against that. You know, and then at the same time, the insurance costs on a Tesla, I looked it up, they're just astronomical. So I'd rather just drive my regular gas car with basically maybe like a $500 a month car payment versus a Tesla, which would run me with insurance probably over maybe $1,200. You know.
All right. Good stuff. Thank you, Chris, for joining. We'll talk to you next time.
Yep. Oh, and by the way, someone's like Mazda says it all. Dude, Mazda, by the way, is working hand in hand with Toyota. Their quality of cars is amazing. So I'd say, you know, anyone who doubts Mazda is a bad company. Just check out their cars.
All right. I love it. We'll talk to you soon. Talk later.
Later.
Always nice to get some hot takes by Chris. So on Tesla, look, I don't even think the take is that hot. I think he kind of sees what everyone else is seeing, which is that 150 is very possible if these margins continue to get depressed and these deliveries continue to go down. In the context of some of his other takes, I mean, NVIDIA potentially having a Cisco moment, maybe demand is being pulled forward, but also maybe demand is actually very real and they're going to keep crushing over the next couple quarters. And maybe they do get that Cisco moment 2 years from now versus in 2024. I think it's going to be really interesting to see how this stuff plays out, or maybe they never get the Cisco moment. Maybe this thing just keeps going. But we'll see how it ends up going over the next few years. Palantir right now is down 24.34. Again, we're going to get an announcement later from Palantir today. That's what my sources are telling me around AIP Now, which is kind of their version of AWS Marketplace. So really, really big news. We'll discuss that when it comes out probably in a few hours. I'll talk about it in the market close, and we'll see what Palantir is going to do. Also, we'll have the Palantir Weekly podcast today at 11 p.m. So we'll discuss it on that podcast as well. Elon announced Cybertruck is ramping, which could be nice for Q2 and onward. This is true. Let me pull up when Elon said that. This was last night. There's a lot of Cybertrucks starting to get made. So this is the picture that he commented under. This is in Texas, I believe. There you go. A record 370 Cybertrucks spotted at Giga Texas today. So this is going to be all of us pulling up to the 2034 Palantir shareholder convention. It's just... literally, we're all just gonna be pulling up in these Cybertrucks, and so this is what we're gonna have to do. All of us are gonna be pulling up to the convention with our Palantir gains here. So there's a lot of Cybertrucks that are being made. Production is ramping up. Now, remember, Elon said 5 months ago that free cash flow positive Cybertrucks are not going to happen for the next 18 months. So looking towards the end of 2024 for free cash flow positive Cybertrucks to actually impact Tesla's bottom line. But the fact that they're ramping up is a really good thing because obviously there's a lot of demand for more Cybertrucks in the broader ecosystem for cars. So we'll see how that plays out. The Mazda is really interesting. I've never had a Mazda before. I've always had a Honda Civic. By the way, my Honda Civic has like 3 payments left. So I'm going to officially own my Honda Civic 2019. Love this car. In like 3 months. I could have paid it off a lot earlier, but I got a pretty good interest rate as well back in 2019. So I've just been paying it off. It also, I think, teaches you some responsibility when you have to make a car payment every month and an insurance payment. Because I bought the car when I was 21. So I'm 26 now. So yeah, 5 years later, I have to make that $311 payment, basically $450 with insurance every single month. You better have that money. You better be able to pay it off. You got to own that car. So it'll be done in 3 months. And then I don't think I want to buy a new car for a while, dude. Until I can afford a Tesla, I'm not interested in buying a new car because I really do love the Honda Civic and I don't want to have another car payment for another 5 years. But when I can get to the point where I can afford a nice Tesla, I think I'm just going to buy a Tesla. I think a Tesla would be a really nice thing to have. And by the time I buy it, maybe FSD is actually solved and I really you can get a real experience in the concept of Tesla. Joe says, Mid, have you paid off your student loans? I have like $6,000 left on those. So that I'm paying basically like $500 a month on those. So I only had $10,250 left from college because I paid off a decent amount when I was in college. Again, I had like my own business in college. So I paid for my own dorm and all that stuff and my loans. But I had $10,000 left after I graduated. And we had 3 years of not having to pay it. So I'm just getting rid of it slowly every single month. Why would you buy a Tesla before a primary residence? Yeah, I probably would not buy a car. That's what I'm saying. I wouldn't buy a car at all, dude. Like if once this Honda Civic is paid off, then the next goal is let's get, a house or an apartment, and then we'll move on to a car. But that's my point. Like if I can afford a Tesla, I should be in a pretty good situation to afford, to move out. But if I did move out and I did have that money, the first car would be a Tesla, dude. It wouldn't be anything crazy other than a Tesla because it's like a Tesla. It's like, I feel like that's the car you want to have like as your day-to-day mover for a long time, especially if FSD gets to the point where it's really good. And so that would be the car that I look at when the finances are there. But it's going to be hard not using my Civic, dude. I've driven like 55,000 miles on that bad boy. Like I have an emotional connection with that car. S&P right now, 522, Unity 2711, Celsius 9155, IWM 206. We do have a red market. Stocks are down, but it's also Friday. And so we're getting a little bit of a sell-off here. Dave Ramsey would not be happy. Oh, boy. Dave is an interesting one. Dave doesn't believe in debt at all. I mean, does he believe in debt or does he not believe in debt? He doesn't believe in debt. He believes you should have no credit card debt, like no debt at all. I don't know if I necessarily agree with that, dude. I think you can use your money in a very efficient way if you know what you're doing while not having to pay. Like it's okay to have some debt because the money has a better use case in the interim versus giving up all that money up front. Like there are some times where you should pay up all front. Other times where it's like, it's okay to like not pay for your MacBook immediately and pay some installments because you can do other stuff with that money in a way more efficient way than just giving it all up to Apple, right? So I don't know if I necessarily agree with the entire argument he says around debt. He believes in debt. He just doesn't like it. Okay. He doesn't believe in debt at all. Okay. So everyone is, I don't know what is he? Does he believe in debt or does he not believe in debt? The borrower is slave to the lender. Okay. So that's his perspective. And also, that's the thing on interest. Like given the debt I use, outside of my card debt, which is a very small interest rate, like any credit cards I have, I never pay interest on it because I pay it off incredibly quickly. So, but it is nice to have it in the moment. And, Robin coming out with that credit card, that's also going to be very interesting. Right now, I have a Chase credit card that I use to buy most of my stuff and I pay it off. Robinhood's credit card, if that can give way more points, because I get barely enough, like I get airline points, but that's pretty much it from Chase. If I can get some real points that are actually effective, I think that Robinhood credit card is going to be exciting, dude. I think there's people that are in their 20s and 30s that want a slick user interface, a good credit card, something that's native to their iPhone, and they can immediately rack up points in a way that is seamless. They will upgrade to gold, $5 a month, which is nothing to have access to that credit card. It's going to be stylish. It's going to be like an actual gold card. They'll probably be able to show off. Like, I think there's a whole experience Vlad is going to build around that credit card, and it's going to get a lot of people excited. But when is the Robinhood event? March 26th. March 26th, we will have that Robinhood event. Okay, cool. So what we're going to do now, it's Friday. So we always do 10 minutes of Q&A on Friday. So the market close is officially, or the market open is officially closed. So if you want to head out, you can head out. Thank you everybody for being here. One last look at the broader equity markets. S&P is at 521, which is still crazy that it's at 520. It's amazing, but it is down on the day. We're getting a red day. I think the red day is mainly just people selling on a Friday. Nothing too crazy. Tesla recovering a little bit at 169. Robinhood at 1847 and Palantir here at 2421, down about 1.14% on the day. We'll stick around for 10 minutes of Q&A. Any questions we have, life, stocks, business, anything random, we'll do that as we always do on Fridays. And then we'll be done for the market open. I'll be back for the market close. Also, 1 p.m., I'll be live with Jose, and we're going to discuss the NVIDIA event. We're moving our semis podcast to 1 p.m. on Thursdays. We weren't able to do yesterday, but it'll usually be on Thursdays instead of 7 p.m. on Fridays, which I think is going to be a way better time because after the market closes on Fridays, I don't think people care about the market at all, dude. So we'd rather move it up earlier in the day and get that stuff out. Well, here's my question here for the chat. What are you guys doing this weekend for Friday and Saturday, Sunday? Are you guys going anywhere, doing anything, hanging out with friends, going out anywhere? I think after the market closes on Fridays, people just like don't want to even look at the market. They just want to like not focus on anything stock market related. I can tell on Twitter, YouTube, everyone's just like kind of zoned out, which makes sense because when you're so obsessed with it, like all of us are every single day of the week, we're just like ingrained in it. You kind of want a day to like not worry about it. Okay, some questions. Have you looked up Clear Secure, 98% institutional ownership and just announced special dividend and buybacks? I have not. I will write it down with my pen right now. Clear Secure. I'll put that on the list and we'll take a look at Clean Secure. See if there's anything there. Namir says, Amit, are your family members invested in Palantir? They are, and they have some better averages than me. My sister, I think, has like 400 or 500 shares at like $17, 12. Or no, she has them. My mom has, I think, at 12. My sister has 17. My dad doesn't have any. But yeah, my sister and my mom have not a lot of shares, but they do have some shares for Palantir. Why is AIP now a big deal? I don't know yet, but the source that I got is telling me that Karp's going to announce something later. Now, will that happen? I don't know. But if Karp is going to announce something and it's kind of on the lines of an AWS marketplace versus an AIP now versus like just like a regular a place to watch videos, then that's a big deal. And it's not like it's new news. We all knew this was happening, but like this is going to be the official announcement. I don't think that's going to have any implications on the stock or anything, quite frankly, because this needs to produce revenue for them. But if they're unveiling an AWS type of marketplace and Palantir's putting out some press release maybe about what that would look like, then I think that would be exciting. I think that would be super, super exciting. Michael says, looking forward to the official AIP Now announcement. Yeah, it should be coming out pretty soon. And if that's the case, I think we will have an actual place where customers can download products from Palantir in one click and then use it. Dude, that's pretty cool. That's pretty cool. It's not going to have huge implications short term, but long term, that should be in another revenue stream that modularizes Foundry and AIP in a much better way. Okay, what else we got? Mark says he's going on an anniversary date to make some shrimp on the grill. I love it, dude. That's great. Men who can cook, I'm told, are very attractive to women. And I don't know how to cook that well. I can make a few dishes, but I need to make cooking like a hobby for me or something, dude. I need to like every month, I need to learn one new dish that I just know how to cook really well and then have that in my arsenal of cooking. Like I can make scrambled eggs really well, dude. Like that shit, I've mastered that over the past 20 years. I'm pretty good at that. Like I would say I'm top 5 in the world at scrambled eggs, but also Alfredo pasta, and I can do that one. But the other things I'm not the best at. Thomas says I'm taking your mom to a nice dinner. That's so unnecessary, dude. That's so mean. It's ironic because I'm taking my mom to like a lunch date tomorrow on Saturday. So yeah, I'll be taking my mom on a lunch date instead of you, Thomas, but nice to know. We're actually, you know what we're doing tomorrow? We're going to this Indian boutique because I'm going to this wedding for my friend who's Indian in June or July. And I need Indian outfits and there's like this dress code. And so we're going to get lunch and then we're going to some boutique to buy up some like traditional Indian garments. So that's what I'm doing tomorrow on Saturday. Namir says I'm taking Thomas's mom. Oh my God. That's hilarious. Lior says, Amit, side note, last night I got in my car with my son, and as I'm putting on my seatbelt, I questioned whether I had locked the door to my home. Guess who came to mind? As I'm putting on my seatbelt, oh, wow. Yeah. Yeah, my dad. Yeah. You know, it's funny. My dad did the same. So basically, for those that don't get it, Lior is referencing the fact that my dad has OCD and like he checks if the door is closed when he leaves his house like 20 times. He can't be functioning if the door is not closed. Yesterday, I actually was downstairs before he left to work. He left to work a little bit later yesterday. Usually he leaves a bit earlier. So I was downstairs and I was just doing some work. And I saw him exit the house. And like 2 minutes later, he comes back in and he had to check the gas to make sure the gas was like off. and then he left again. So, and he's 62, dude. That OCD, it's hard to get rid of, man. It's really hard. You got to kill it when you're young. Otherwise, I mean, at 62, dude, he just checked the gas. I know he knew the gas was closed and he came right back into the house, had to check it again, and then he had to leave. It's tough, dude. Ritualistic OCD is very, very tough to deal with. So, and again, you guys know I kind of struggle with that a little bit as well. So I'm trying to kill it while I'm young, so I'm not older and having to constantly check the gas. But it's a tough thing. It's definitely a tough thing. Why does he not check everything before he leaves so he doesn't have to come back? Well, he does. That's the problem with OCD. He does. He already checked it and then he left and then he checks it. That's the problem with OCD. It creates this like virus in your mind that if you don't check it again, something bad's going to happen. It's totally irrational. It makes no sense. And I do think you're born with it because I have it and my dad's dad had it. So I definitely think it's genetic. If I have a son, I'm pretty sure he's going to have it. My sister doesn't have it that much. So I don't know. Maybe it's a gender thing, but if I have a son, he's gonna have OCD, dude. And I will try to kill it as soon as I notice that he has OCD. Like I'll know by the time I was like 8 years old, I remember I had OCD. Like I would be organizing my toys more than playing with my toys. That's where my mom noticed it. So if I ever have a son and I notice he's like doing certain rituals, I'm gonna try to immediately be like, yo, you don't have to do it. We're gonna try to work through this. Because it's annoying. If you grow up with it, it gets very, very annoying when you have it. OCD comes when you're old. So look, there's two types of OCD. There's the OCD people talk about conventionally about like, oh, you're OCD about this. And then there's real OCD. Like you cannot function unless you do your compulsive disorder, whether it's a ritual or checking the gas or whatever it may be. I think there's two versions of it. There's one that like society thinks like, oh, I'm so OCD. They use it in such a colloquial way. That's a good one. I pulled that word out. That's a good one. That's a good one. And then there's actual OCD. So yeah, I think there's different versions of it. Amit, are you going to Edison? I need some clothes for an Indian wedding too. I don't know if it's in Edison. It might be in Edison. For those that don't know New Jersey, Edison is like Indian capital in New Jersey. If you go to Edison, you're basically going to see a smaller version of India. So it's probably in Edison. I actually don't know where the location is. But yeah, we're probably going to be getting clothes from there for this wedding. This reminds me when your sister's date was an Amit fan. Dude, so those people that don't know that story, my sister went on a date with this guy and he was like, he was like, so I follow your brother on Twitter and I like check and I have post notifications on every time he posts about Palantir. And my sister was so upset. It was the best thing ever. My sister was like, you follow my brother on Twitter? He was like, yeah. It was like, I love his videos. And my sister, because dude, my sister does not know about what I'm doing here, right? Like she doesn't know that. She thinks I'm just home all day jerking off, quite frankly. That's what my sister thinks. She doesn't understand I'm trying to build a fucking media empire. And she doesn't really get it because she has like a real job, right? So like we always joke around. She's like, oh, you just do nothing all day. It's like, no. Like I'm doing some stuff all day. I just don't have to go drive somewhere to work to do what I need to do because I'm building stuff in a different way. And by the way, for 3 years, I did drive every single day, 120 miles a day, 5 days a week, up and down North Jersey. So I feel like I know what it feels like to wake up and have to fucking like work and drive and like come home at 11 p.m. Like, dude, I did that for 3 years. I did it. I get it. But things have changed. And so now I'm in a different state of life. And so it's so funny because she's just like, you're just making videos. And I'm like, yeah, but like, there's like a business around this and there's media and content. She just doesn't get it. She doesn't understand that there's 35,000 people that follow me on Twitter. Like she doesn't understand it. One of those 35,000 people happened to be her date. And she was grossed out. She was completely grossed out by it. She doesn't follow my tweets. She doesn't watch my content. She doesn't tune into my streams. Like, dude, she does not follow anything I do. I could tweet the craziest shit about my sister. I could be like, I hate my sister tomorrow. She would never know it. She just doesn't care. So it's kind of cool too. Like, because like you're so disconnected from your family. Like they don't really understand what you're doing. So like, I don't know, in a way it's kind of just like, it actually keeps family more family. There's no like other parts to it other than the fact that she's just my sister. I'm her brother. But when I mean she doesn't give a fuck, dude, she doesn't give a flying fuck about what I'm doing. Like she does not care at all. He may have even asked her out to get closer to Amit. That would be hilarious. Could you imagine trying to get some Palantir due diligence? Could you imagine trying to get more Palantir due diligence by dating a content creator's sister to try to get closer to learn about Palantir? That would be the craziest story ever, dude. That'd be insane. Iceman JJ says, Amit, Gunjan just posted on X. Dude, I don't care about every little tweet Gunjan posts, okay? Like, she's cool, but she's not like, oh my God, I need to see your Twitter post. Goodness, dude. Gunjan posted on X. What did she post about, though? Send me the link. I'm curious. June says he probably thought he was gaining points with your sister. Maybe, but she just totally hated it. She did not like it. How old is your sister? She's 30 now. I'm 26. She's 30. I'll be 27 in October. Amid thoughts on QQQ puts as a hedge. When it comes to hedging right now, dude, I understand. And I think it's not a horrible idea. By the way, market just went totally red. Everything's red right now. Robinhood's down 3%. Palantir's down 1.6%. But this market is resilient and earnings are good. And so if you do puts as a hedge, I feel like they've got to be hedged at a certain time, because if you leave those puts for too long in the market, like, I get why you want to put at an all-time high. I get why you want to hedge, but I also just feel like there's not a real reason for the market to tank. Like, it doesn't feel like 2021 to me. So I wouldn't make it a big part of the portfolio. If it's a small part, that's fine, but I wouldn't. Like, someone on Reddit the other day was posting like they're just shorting the crap out of the S&P. I'm like, dude, like, sure, you can do that, but people were shorting at 500, at 505, at 510. We're at 520. I mean, maybe we take a little bit of a dip. Maybe that happens. That's reasonable, but I don't know if that's the best strategy long term. DWAC went from 48 to under 42. Yep, DWAC is down as well. Use SQQQ calls or TQQQ puts as an hedge. That's also another way to do it versus just puts on QQQ in and of itself. Austin says, Amit, can you talk about your process when looking at companies and determining if they were good or bad? I feel like it is more than just looking at the numbers. Okay, it's an interesting comment. You bring this up. I am thinking of starting a little bit of a series on the channel, and it's all about basically this. So, like, you know how I wanted to do lunch with Amit? The problem with lunch with Amit is there's not enough guests every day to do lunch with Amit. So I still want to do lunch with Amit, but the question is, like, what can we do during that hour if we don't have a guest? And, like, again, I think we will get a lot more guests in the future. We got Fred Krueger over yesterday, but like, guests is something that takes time to develop. You can't just get a guest every single day, right? Because also people are busy because it's lunchtime. So I was thinking of starting a series where I pick one company every day, and for an hour, we just break it down during lunchtime. So it's kind of like maybe Lunch and DD is the name of it. I don't know what the name would look like, but during that show every day, we can pick one company, and I would basically prepare an entire presentation. And it wouldn't be like a formal PowerPoint or anything. I would get a bunch of clips of the CEO talking. We would get the numbers pulled up. We would look at analyst commentary, and basically that 1 hour, it'd be super nerdy stuff. Like, you would only join if you like really care about diving deep into DD about a company. And you don't even have to like the company, but it can show you kind of the thought process I go through about trying to analyze a company. Because what I did with Robinhood in December, when I really started buying it hand over fist, I want to see, can I replicate that process against many other stocks? Now, obviously, valuations have to be there for me to be able to see those opportunities. But what I saw with Robinhood, what I saw with Palantir, I'm like, all right, we need to do this again and again and again. And we need to have a really strong methodology and a framework psychologically and tangibly to be able to execute against doing proper due diligence. And I don't think I'm there yet. Like, you know, Robinhood and Palantir are good, but I think I have a lot to learn to really be able to find these guys over and over and over again. And so I'm thinking every day, like Lululemon, I don't really know that much about it. I know some basic stuff about it. I didn't even know the market cap. An hour dedicated, like a really in-depth presentation on Lululemon. If there's like 5 criteria that match our buy or sell ratings, maybe that would be a good lunchtime show every day. It would be a lot of work that I would have to put in, but I think that would be an exciting thing to do every day during lunch. Go through the S&P 500. Yeah, literally we could go through the entire S&P 500. So I think that's an idea, and I think we will do it every day during lunch. Don't know if it'll start next week, because next week's really busy. Next week's busy, dude. We have New Orleans. We have that special interview I was talking about. That interview is going to be a fucking fun interview. I'll talk about that in a second. And then I don't even know if I can do the market open on Friday because I'm going to be in New Orleans. I think at the Airbnb I'm at, I'll have a room to be able to do it, but I don't know. So next week's going to be a little tough to start it, but probably in April we should start it. Get someone for Novix. Yeah, I'll probably get Vitaly for Novix and have him break it down for that full hour. He's like the smartest person I know on that. But there's probably other people on Twitter I can reach out to for Novix as well. It has a big community on Novix. Amit, can you do a course on dating your sister? We got the best chat on YouTube, dude. This is hilarious. Amit, could you bring your sister on a live show? Dude, the problem with my sister is she's actually pretty creative. She used to write poetry, like a lot of poetry. And I've always encouraged her, yo, start a Twitter, start a YouTube, start an Instagram, like post your poetry, but she's very scared of what people think. She has a fear of other people's opinions. So like, today in the beginning of the show where I couldn't pronounce logarithmic and I was like logarithmatically, right? Like I couldn't say it. Like if she messed up in front of 1,200 people and she said logarithmatic instead of logarithmic, that would like destroy her because she would be like, oh my God, what do these 1,200 people think? They think I'm such an idiot. Like, I don't know how to say these words. The way I interpret it is like, well, it's a fucking hard word to say. So if you got an opinion on why it's hard to say the word, then that's your opinion, but it's a hard word to say and it is what it is. So, to me, I interpret it as like, it's not that big of a deal. I don't think people care that much. And also you seem like you're more human if you make some mistakes because not everyone's perfect. Whereas she feels a lot, more scared. So that's her problem with why she's never done content. And I've told her like, yo, you start a Twitter, like you can really gain some momentum, but she just doesn't care. Or she cares, but she's too afraid of what other people think. And I think that's the hardest thing for a lot of people to get used to when it comes to making content. But once you get over it, like, a lot of fun stuff can happen if you just start putting out more content. Okay, the interview next week. So I'm not going to say who the guest is because I've kept my big mouth quiet for a month now, so I'm not going to ruin it today. But it's a fucking good guest, dude. It's one of those. So I was listening to a podcast yesterday by a woman named Bobby Altoff. I don't know if you know who she is, but she's this random podcaster who came out of nowhere, right? And she got to interview Drake, the music star. And in that interview, she was saying, I was sitting on the Drake interview for like 3 days, and I realized when I dropped this interview, it was going to change my life. I'm not saying this interview is going to change my life, but I am saying this interview is probably going to open up opportunities for more interviews with other really big names. And that's why it's a big deal. It's not going to be the interview that gets like 1 million views or anything like that. It's not about the views. It's about the credibility of getting an interview with this person so that you can reach out to a lot of other fancy people and be like, hey, I got this guy. It is a guy. I got this guy on the show. Do you guys want to be on the show? And then they're like, oh, that guy's really legit. Why did he sit down and talk with you? Okay, maybe we can talk with you. And then it just kind of, this is what Lex Friedman does, right? You get the big names, you get the big names. Why does he get Sam Altman? Because he's Lex Friedman, right? And it takes years and years to build up to that level. But I think this is one of the interviews that can at least start this process. It's not Carp. It's not Carp. I promise you guys it's not Carp. It's not Carp. By the way, I mean, I'll just say it right here. The Carp interview was actually supposed to happen at AIPCon. Like I was actually supposed to go there and do the Carp interview, but then so much stuff got messed up in scheduling. Like that was in the works. That was going to happen. And then it got fucked. And so I think the Carp interview will eventually happen this year. Carp is down to do the interview. We'll probably let it happen. But AIPCon, I mean, they were running around like crazy to try to get that interview to like schedule the whole AIPCon. So Carp interview will happen. It's just not happening soon. I hope it'll happen. Let's see, but I think there's a good chance that could happen. And if it does, that would be a big interview. But this interview is also really important, but it's not Carp. I promise it's not Carp, but it's a really important one. It's not Drake. It's not Joe Rogan. He got Biden on an interview. It's not Biden either. It's not Dan Ives. Dan Ives is a big name, but this guy's a little bit bigger than Dan Ives. It's definitely not Don Lemon. I think that would be interesting. Don Lemon, by the way, yesterday he said, I think Elon hates me because I'm gay and I'm black. And I was like, okay, all right, Don. By the way, there was a Yahoo Finance article that came out yesterday saying Don Lemon interviewed a mediocre white man. You can look it up right now. That article is still live on Yahoo Finance right now. So that was an interesting expedition with Don Lemon and Elon. And I think it's actually good Elon canceled his contract, not because I want him to cancel Don Lemon's contract personally, but because it does seem like in that interview, Don Lemon was very sort of like, let's have a lot of censorship. And I think Elon at that moment realized, why the fuck would I give you millions of dollars to post on X, which is the censorship resistance platform, if in this interview you're trying to convince me that we should have a ton of censorship over hate speech, which who gets to define hate speech, right? It gets into that whole debate. So I think Elon basically realized if you're not going to be down for free speech, then we can't pay you on the platform. But it's not Don Lemon. It's not Don Lemon. It's not Elon Musk. Dude, Elon Musk would be a big interview. Elon Musk would be fucking big. It's not Rishi from RBC, even though Rishi from RBC would be a hell of an interview. Hell of an interview. That would be fun. That'd be fun. Sean said, yes, please do that. I love this idea. Lunch with Dad. Okay, cool. So the lunch show will be happening. Not next week, starting in April. I'm excited for it too, because to me, I'm just going to have a better chance to, like, even Amazon. We all know what Amazon is, but if we could have an hour of really breaking down Amazon, I think that would be that would be good to do every day. It would probably be 3 days a week, because the other 2 days we would have guests. And then so 3 companies a week. By the end of the year, we'll have, 100, 200 companies we analyze. I think all of us will get smarter, including myself, to be able to do it. It's not JCal. I can't say who it is, dude. I'm not saying who it is. I'm not going to fucking ruin this one. I'm not saying who it is. I'm just not saying it. But it's a big name, dude. It's a big fucking name. At least to me, it's a big name. And I think to the broader finance community, it's definitely a big name. And the funny thing about this interview too is he wanted to do the interview with me. He reached out. I was talking to his communication chief the other day, and I was just like, so who came up with this idea? And she was like, well, we were in the boardroom together, and he was just like, what about Amit? And as soon as he said that, dude, I was like, yo, that's fucking crazy, dude. That's actually insane. So Ross Herbert, it's not Ross Herbert. It's not Gunjan either. Not Gunjan. But it was crazy, dude. Brett Winton, it's not Brett Winton, but I want to talk to Brett Winton. Dude, that guy is so, it's just, every time he talks about technology and innovation, and he put out a video the other day, and the way he talks about it, I'm like, it's just so weird, dude, how he talks about it. He talks about it like he's some revolutionary, futuristic dude, and then they're investing in Roku. It always just makes me feel so weird the way he thinks about tech. Because there's an era of pretentiousness that the ARC research people have, because they just think they're better than everyone else. But the returns don't justify being that pretentious. If the returns were good, I'd be like, yes, be as pretentious as you want. But it's not necessarily there. But I would love to interview him. I would love to talk about Tesla with him, because I think they've got Tesla right from a long time as well. Anyway, let's move on from that topic. I will not say who the name is. I see what you guys are saying in the chat. I'm not saying who it is. I see the messages, but I'm just not gonna give a correct answer or a wrong answer to who this person is. All I'm saying is that it's a big name. It'll be fun. Now, I need to make sure I do this interview really well. So the camera, the lighting, all that stuff, we got that figured out. That's good to go. I need to make sure my questions are poignant and they speak to the heart of what I want to get. And what I want to get out of this person that I'm doing this interview with is, how did you build the company? Like, I want to know the non-clickbait stuff. I want to know, like how did you actually take an idea and turn it into a multi-billion-dollar company? That's another hint for people that don't know. That is publicly listed. That's another hint for people that don't know. And then like how do you think this company is really going to evolve over the next 10 years? Because in my opinion, I think the company could be just like a monster in the broader financial space if they keep executing. So those are kind of the core questions that I have around this person. It's not Peter Thiel, although Peter Thiel did release his fellowship. Did you guys see this thing? Peter Thiel fellowship winners. Yeah, he released the fellowship winners yesterday. And there's some interesting names on these of some interesting people. These are people that get $100,000 to drop out of college and basically build cool stuff. So we can go through the list in a little bit, but I would love to interview Peter Thiel. And see, this interview might get me closer to interviewing Peter Thiel. So it's not Peter Thiel yet, but this will get me closer. It's not Anthony Noto. I don't think dude, if Noto doesn't even sit down with the SoFi, like Tanner was telling me that like Noto won't even sit down with the SoFi Weekly dudes, which is ridiculous to me, dude. Absolutely insane. And by the way, I said this on the SoFi Weekly. I remember November 2022. I remember because I think Tanner had reached out to the Weekly dudes or the SoFi IR, and they're like, oh no, we're not going to have him come on the podcast. And at the time, I remember on the podcast, I was just like, what the fuck? Like, you have people that are dedicated to talking about your company once a week, every single week, and you don't even want to give them the courtesy of showing up on the pod. Like, that's insane, dude. And apparently the Tanner reached out a while ago and they still said, no, you guys talk about the stock too much. And I'm like, Well, during the the interview that I'm having with the guy that I'm talking to next week, I'm not going to ask him about the stock. You know why? Because first of all, in that type of an interview, you're not doing some CNBC hit piece where you're trying to get a gotcha moment about the stock. You're trying to actually get to know the person. Second of all, like, why would you ask about the stock? Like that's not timeless information. That's like this kind of like random of the moment. Like you want to know about the story of that person. So if Anthony Noto were to come on SoFi Weekly, I don't think Tanner would be grilling him about the stock. I think he would be asking him about the future of SoFi. So it's really weird to me that I mean, even Palantir, Shyam Sankar went on Tom Nash's show, right? So like even Palantir is engaging with retail way more than SoFi is, at least from a podcast perspective. They're good on Twitter, but they're not good on the podcast. My thing is, if Noto can do an interview with Cathie Wood, he should do an interview with Tanner. He should do an interview with Tanner. Absolutely. Like the fact that he chooses for Cathie Wood, but not Tanner is disgusting. Tanner has more influence than Cathie Wood when it comes to SoFi. I'll say that right now. They said there are fans of the show, but we are too stock focused. Yeah, that's stupid. They can get the questions ahead of time, and the questions can be about anything but the stock. Like you're allowed, like that's like we can't go on the show because we're too stock focused. Okay, what if we don't talk about the stock? Then can you come on the show? Like it's just so like Noto will go on. So Kramer is not too stock focused when he's literally asking him why the fuck is the stock down, but the SoFi Weekly is too stock focused. Get the fuck out of here. That's the dumbest thing I've ever heard. It is disrespectful to the retail community from SoFi's end to not do this, to not be on that podcast. I take that really seriously, dude. That's actually like, especially when your stock's in the gutter, dude. If your stock's in the gutter, I feel like the people you should be engaging with are the people that are losing thousands and thousands of dollars because they bought your stupid stock at $9 and then you do this convertible debt thing out of nowhere. You should be engaging with them, in my opinion. I really think you should. So, yeah, that's not bad. Now, granted, at the end of the day, I'm bullish SoFi. That doesn't matter. But I've always had a gripe with not just SoFi, but companies that do that, right? It's so weird. Like, if you see retail investors are better than the fucking CNBC analysts and the analysts on Wall Street at analyzing your stock and your company, you should actually give them a chance to talk to you because they don't get a chance to actually talk with the big, high-profile, multi-billion-dollar net worth CEOs. Only the analysts do. And the analysts are not as that. The analysts are influential, but I'm starting to realize they're not as influential as some of the people on retail. Like Tanner is way more influential than any SoFi analyst on the street. Maybe the banks will care about, the Goldman Sachs analysts a little bit more than Tanner. But in regards of just broader distribution, I think people like Tanner matter way more than some of the analysts. So I don't know. It's important to see companies actually start to respect that a little bit more and care. Because I think that is the future of retail investors getting into finance. So anyway, that'll be a fun interview. And it's not Anthony Noto, but it's someone who is wanting to engage more with people like me. And so it'll be super fun to do that interview. Michael, thank you for becoming a member of the channel. Appreciate it, dude. Michael, next time I'm in LA, dude, we gotta go get dinner. I know we couldn't make it last time, but next time I'm in LA, we gotta do it. But the analysts have more stock influence. This is correct. They do have more stock influence given how the investing community perceives analyst expectations. Again, I am not going to say who it is in the chat. So everyone who's asking, I cannot give the answer. I can say who it's not, and it's not Cathie Wood. It's not Noto. It's not Karp. It's somebody. It's not Cardi B. But I can't say who it is. It's a CEO of a certain company. That is correct. It's a CEO of a certain company. It's not Peter Beck. It is somebody. But it's no one that you guys have mentioned. It's not Jay-Z. It's not Shyam Sankar. Even though Shyam, dude, I got to get the Shyam interview too. I think Shyam would be really good just to pick his brain on defense and everything. He's done a lot of interviews recently as well. So that'll be fun to get Shyam. It's not Tom Lee, but I think I'm going to get Tom Lee soon, dude. This guy keeps liking my tweets. I think I'm starting to get on his radar. So I think we're going to get Tom Lee pretty soon, dude. Not pretty soon. I shouldn't say that because you never know with scheduling, but I think we should get Tom Lee, dude. We should be able to get him. He also did respond to me once saying to message like the Fundstrat team to set it up. And I did. But obviously they're just so busy that it's hard to make it happen. Well, we should get Tom Lee. Okay, so we'll move on from the interview question because you guys can't seem to figure out who it is, which I can't tell you who it is, but I think we'll move on since no one can figure it out. It's not Donald Trump, but I would love the Trump interview, dude. That would be fun. Interviewing the president, that would be cool. If it's Biden or Trump, that would be fun to interview a president. I would actually ask real questions, dude. If they allow me, if they say, hey, we have to ask these questions, then I mean, I would still do it, but it wouldn't be fun. But if they actually allow me to do it, I would ask some good questions. I think to both of them, some hard questions to both of them. It would be fun. It would be cool. Shah Rukh Khan. It's not Shah Rukh Khan. Not fucking Shah Rukh Khan, dude. Is it Jimmy Carter? No, it's not Jimmy Carter. Is it Tom Brady? No, dude, you guys are so bad at guessing this stuff. I'm sorry. You guys haven't guessed it. It is what it is. It is someone who's very, very important, but it's not anyone that you guys are guessing. Someone says, what book are you reading? I am reading no books right now, dude. I've come to the conclusion that reading books is boring and it's not exciting and it's a waste of time given you could listen to the audio version of it. Like, I'm getting pretty bearish on reading as a concept. Now, I know people listen to that and they're like, this guy sounds like an idiot. Reading is the most intellectually stimulating thing you can do to like learn about the world, blah, blah, blah. I do read. I read a lot of articles every day. I read a lot of, basically articles. I read a lot of Bloomberg, Wall Street Journal, Market Watch. Like, I have a ton of subscriptions. Like, I read a lot of shit. I read a lot of macro data. I read. But sitting down and reading a book, and by the way, it's a spiritual experience, right? It's lasted since the beginning of time. I read about 30 books going into my junior year of college. That's when I really got into like self-help and motivation and all that stuff. That's when I read 0 to 1 for the first time. I read it again 2 years later when I actually understood 0 to 1. But now I'm kind of bearish books because it's just like it's not effective use of your time, like sitting down there and reading. Now, one could argue that the productivity you gain from absorbing the information at that moment is productive, which I get. But for someone like me that like needs to be doing a lot and like I'm producing, I'm making content, all that stuff, like sitting down and actually reading versus like doing something with the audio in the background, it's a night and day level of influence or of productivity from how I'm getting influenced by the content. So yeah, I'm pretty bearish books. Not that excited. Bearish on reading as a concept. That is a tombstone worthy. Dude, like reading a book versus just listening to a podcast. You're going to absorb so much more information in such a more efficient manner. Like I don't know if books will be around in the next 200 years. At what point do books become so digitized? At what point do we just insert a chip inside of us and get the information for us having to actually read from the book? I don't know. Now, I know books are timeless. I get it. But it's just not effective anymore. It's just not effective. Amit, what do you think Vlad will say about your brick wall? Well, Vlad's not in my studio. And so I don't think he will have any opinions on this brick wall because he doesn't know that we have a brick wall. So I don't know what Vlad would say because Vlad doesn't know about the studio. Michael Schaefer says, plus nowadays you could literally have ChatGPT summarize books in a few paragraphs. Many books, due to the nature of paper publishing, have a lot of bloat that's unnecessary for their intended message. Yep, I agree, dude. A 300-page book in today's day and age, dude, ChatGPT that shit, give me 5 bullet points, I'm good to go. Like, unless it's nonfiction stuff, you do not need, like, no one needs a book on business. No one needs a book on motivation. You need 5 bullet points and then you need to take action. That's it. And I think everyone eventually has the phase where they go through the self-help stuff. And I did it when I was 19. I know a lot of people do it when they get to like their 30s and 40s. But once you get through that phase, you start realizing all of this is about execution and taking action. None of it is about sitting and reading about your next thought project on how you could build a big company. Like, no, you have to go out there and you have to fucking try and fail and deal with the mundaneness of actually trying to build something. So ChatGPT can tell you that really quick without having to read. Arnie says, I also am consuming more pods than reading, and the essence is the same. I like walking while learning. Yeah, dude. Like going on a walk. I know Arnie does this a lot. Going on a walk and just listening to something. It's magical. Absolutely magical. You get to walk. You get to learn about the world. You get to internalize these thoughts. And then you get to make assumptions and judgments based off that versus having to sit down and read. Also, most people don't walk and read at the same time. That's not that easy. So it's just more effective to do something and then listen. Savici says, I have to say, Amit, I truly appreciate no advertising on your channel unless it's to subscribe to your guests or your crew. Yep. And that's how it's going to be, dude. That's how it's going to say. That's why it was funny yesterday when I said I'm like starting this new account for like trading options. People are like, oh, that's going to be like his preview to the course. just not doing a course, dude. I'm not doing that. But I care so much about the journey of it, because again, I've noticed as I crowdsource my information, my DD, whether it's about options or Robinhood or whatever, I get so much back from people that are consuming it, and they're able to give their insight. And so you just keep compounding the information, and then everyone wins, right? Without having to like sell anything or monetize anything. And look, if we're doing it in the markets, we should technically be making a lot of money off the markets if we're doing it. So it's usually the best route on how we do this. And now we just got to see it play out. Like Robinhood, we just got to see, can we get to that 25 by the end of the year and see what ends up happening? What are you wearing to the interview? This is a good question. I don't know. I have no clue, dude. I might end up wearing the hat if I'm having a bad hair day. That's like a game time decision. But I don't know. I was thinking of wearing the Scorpion jacket, so I might wear that. I actually don't know. Maybe like a white dress shirt, Scorpion. I don't know what he's going to wear. I'm pretty sure he's going to be casual. I don't think he's going to dress up or anything like that. Again, it's not CNBC. It's a podcast. So it's probably going to be very casual, dude. It's not going to be that crazy. What kind of music do you listen to? You know, it's so interesting you asked that question. I've started to not listen to music as much. It's kind of weird, dude. Like today, I don't know if you guys are super big into hip hop, but Kendrick Lamar released a song where he's dissing Drake and J. Cole, and it's like a pretty aggressive diss. And this morning it popped up on YouTube, and I started listening to the song, and like I have not listened to music in so long. Like it's like I all I listen to is stocks, like financial news, podcasts, CNBC, Liz Young, even though she's bearish. Like I just listen to stocks all day. Like I don't even know where the time is to listen to music anymore. So it's like today was the first day I listened to some music in a while, dude. Like I was like, oh wow, music, that's what it sounds like. It's kind of ridiculous, dude. But I feel like that's also the zone you have to kind of be in when it comes to creating content. Because if you're going to talk about this stuff all day, you need to have an understanding of what you're going to talk about, right? And so you have to consume a lot of information. So Mark says no music, no reading, dude. I know, dude. It's tough. It's like it's stocks. It's stocks. Breaking news from Wall Street Journal. Investors approved a plan to take Donald Trump's struggling social media company public, putting him one step closer to a roughly $3 billion windfall. So we talked about this yesterday on the Market Open. Truth Social does $3 million in revenue. They're trying to take DWAC public for $3 billion, which means, no. DWAC's going to go public at $5.5 billion. So Trump would make $3 billion in his stake would be worth $3 billion, which is insane, dude. Trump has a 60% stake in DWAC, which is Truth Social. Truth Social, let me say it again, does $3 million in revenue. This thing is going to de-SPAC at a $5.5 billion valuation. People thought Reddit's valuation was excessive. And then Trump owns 60% of it, so he's going to have $3.5 billion. And if it works, he's going to be able to use that money to pay off his legal fees and his bonds and all the stuff that he's stuck in. It's going to be a hell of a thing, dude, if Trump can pull this off. That is insane. That is insane. Tanner says, have you given your thoughts on Reddit? Yeah, I was actually talking about it on a Twitter Spaces this morning. I think Reddit is actually cheap. Not at $50, at like 40-ish, 36-ish. I think it's cheap. I don't like the advertising business, but I do think the real-time data they have will be a moat when it comes to training models and getting these deals like they're getting with Google. But I don't know if it's going to be like, what's a $6 billion company? Could I see it being a $20, $25 billion company? Yeah. They would have to increase top line growth by more than 20%, but I don't think it's overly, and I've said this for the past 2 weeks. I'm not buying the Reddit IPO, but I never thought it was expensive. $6 billion kind of felt decently reasonable to me. In fact, it felt cheap, but I don't know. I don't like the advertising business. I don't like the user growth. I think the AI business is cool. I just don't know how fast that's going to grow. And so that's why I'm not super into it. Cool. So that's that. What else do we have? I still like music, but I also never set time aside for it. I listen while driving though. Yeah, maybe when I'm driving, sometimes I listen to music, but nowadays it's more stocks, even when I'm driving. It's so weird, dude. Like once, at least me, when I become obsessed about something, like I did this with basketball when I was in high school, when I get obsessed about basketball, I started listening to every fucking sports debate podcast on the planet. Like I've always been an auditory guy. I've always listened to shit. And when I get obsessed with a certain niche or genre, I just get so deep into it. And I just keep listening to stuff. So it's hard to find time for music now as well. You should have a subreddit. The problem with the subreddit, dude, is it'll get toxic in like 5 minutes, dude. Subreddits are so they're so weird. Even the Palantir Reddit, like I never post on it because there's people that are just they're just willing to like say, because the anonymity of Reddit allows people to say whatever they want, which makes people go crazy. And it's a lot of incels, quite frankly, that are on Reddit all day. And so you'll get some incel behavior with people saying weird shit, you know? Brian says, I'd love to see Amit all dressed up in a suit and tie. Then he'd be ready for network news, which he'd be good at. Maybe I should do that, dude, for a week. Maybe I should just get suit and tie. You know, you guys remember I used to wear like the dress shirts. I kind of stopped doing it just because like it's kind of uncomfortable, dude, when you're trying to talk and move your hands and like get through these videos and stuff. It's like kind of uncomfortable wearing like a collar shirt. So maybe we need to bring it back and see what we can do. We still have to upgrade the set, dude. We got rid of the previous set, but this thing is a mess. So everything here in the back. By the way, I got the air freshener yesterday. Febreze Air Linen. It's the best smell on planet Earth, dude. Like that Febreze, the linen mist. I would snort it if I could. It's great. It's great smell. But yeah, we got to fix up this whole background. Bullish on Febreze. Is Febreze public, dude? What company makes Febreze? What company makes Febreze? It has to be like the Unilever. Oh, Procter & Gamble. Okay. Procter & Gamble. Procter, they own so many consumer brands. It's pretty incredible. I wonder what the story is on Febreze. I want to do a deep dive one day on who made Febreze, because that person had to have sold the company for a lot of money to Procter & Gamble. Or maybe they sold it for cheap and Procter & Gamble exploded it. But I would love to know about that. You finally mentioned it. Yeah, it's just randomly there. What's in the back? We have that Time Magazine Palantir thing. A fan sent me that. I showed you guys that a while ago. We have a keyboard for the iPad that's there. We have some Beat headphones. We have my options notebook in the back, the green one. And then we have the Febreze. That is what we have in the background. I thought the playback speed was 2x and not its normal. Damn, you speak so fast. There was someone on the channel the other day that was just like, why do you speak so fast? And I was like, welcome to the channel. Like, dude, every time people have been saying this since 2021, I can't speak slow. I just feel so scared that like people are getting bored or they're like getting annoyed if I'm taking my time to talk about a subject. So I just speed it up and we keep it moving. So we got to do. Because I've listened to Meet Kevin's Market Opens, and I guess he just has a different audience or something, but he is so slow, dude. It will take him like 10 seconds to get through a sentence. And I'm like, dude, I can't sit through that. So like, I guess there's an audience for it, but I think there's another audience that just wants quick updates immediately. Let's move on. Let's talk about this. Let's get to the next segment and let's keep it going. Fast thinkers speak fast. That's also a thing. The other problem is my mind is moving very quickly. That's the benefit of having OCD. So the bad part of having OCD is that, you know, you constantly have to check things and there's rituals and stuff. The benefit of having OCD is I can basically make connections between anything. Let's do a little experiment here. Name 2 random things in the chat. 2 random things. I've done this since I was little, so let's see if I can do it here. And I'll try to make a connection between those 2 random things. And what that skill has been able to do for me while I'm doing the live stream is basically when you have to talk about a subject and you have to make connections and try to formulate an argument in a meaningful way. If you have enough information, you can connect it together. You can convey a message that's interesting to people. And then that allows you to kind of speak in a way that's a bit more exciting when you connect that stuff. So there's a lot of different ways that it goes. And so my mind just kind of goes into a bunch of different directions. Israel and your mom. Israel, my mom is real. See, like that's a stupid thing, right? It's just like Israel and your mom. And like, I'm not saying that's the best connection, but my mom is real, right? My mom is a real person. Israel is real. And so like, that's not a great connection. But the point is immediately my mom, just like my mind just like, okay, what's the connection? And then boom, there you go. And so, and like, It's like Israel is dropping some bombs. If I woke up late in the morning when I went to school with my mom would sound like she's dropping some bombs in terms of how much she yells. Like, right? Like there's just random things that goes through my head when I think of this stuff. And that's a cop out. Yeah, it's not the best one, but the point is there's all these connections that happen. Robin and Hood, the connection between those is fucking money. Okay, that's all we need to know about that. Okay, chapstick and Aquafina. That's an interesting one. So Aquafina is when you drink water. So you're drinking water in your Aquafina bottle, and that allows you to conquer your thirst. In order to drink water, you need to make sure that your lips are not chapped, because your lips are the first things that are touching that water. So as that water is going down your esophagus, they need to first go through your lips. And in order to make sure that the lips are ready for the water, you need to make sure they're not chapped. Now, if it is a cold winter day, if your lips are like mine, will get chapped, which means if you're drinking cold Aquafina water, not only will you get a cold because it's a cold winter day, but your lips will also hurt because in the winter, you would be drinking Aquafina with chapped lips. So you need chapstick to be able to unchap your lips in order to make sure that the water that goes through your lips as you consume it doesn't hurt you and your overall health. Again, it's stupid. Maybe that didn't even make a lot of sense. Maybe there's some resemblance there of a connection, but it's like that's how my mind thinks of this stuff. And then on the market open, when you actually have like JPAL and Fed cuts and Nvidia stock price, you can take these things and put them together and actually turn it into a reasonable argument or message that you're trying to convey. Like, for example, when we were talking about TikTok, right? I actually wrote this down. When we were watching his TikTok a piece on CNBC, and he said, oh, TikTok is going to leave because of McDonald's, because China's going to kill McDonald's or whatever. And then, I was thinking about Brad Gerstner. Like, I just wrote these 2 points down for 2 seconds. And then I started talking for the next 6 minutes about my take on this. That's where the skill is valuable, because you can take what someone else is saying, you can connect it to other information you got, like from Brad Gerstner yesterday, basically talking up his book and not really caring about banning TikTok because he's going to make a lot of money off of that. You can connect that to what's happening with China. I watched a documentary last night on China in regards to McDonald's, Starbucks, all the different companies that are there. Then you look at China's economy, that's falling down the drain. They can't afford to get rid of McDonald's because McDonald's is hiring a lot of the youth that are unemployed in China. And you take all of those things together, and then you can talk about all of that in a 5 to 6 minute segment when you're covering TikTok on the market open. But you need to be able to make all those connections at really hypersonic speeds for a live stream to work, because you don't have a fucking commercial break. You don't have a lot of guests, right? You just have your own thoughts, and then you need to put it together. Let's see what else do we have. I want to see if we can do another Vlad an interview. I have no idea what the connection would be between those. So I think the skill set is not going to work effectively on those two words. So I don't know. I can't connect those. Sorry. Can't connect those. Not able to do it. What are some other ones we have? A watch and an alligator. Okay. So, well, I would say that if you are going to try to pet an alligator, you probably shouldn't have a watch on, because not only can it bite off the watch, it can bite off your arm, which would be wearing the watch if the alligator ends up, getting a little too close to you. And then you would realize that at that moment when you were wearing the watch and you tried to go pet the alligator and the alligator bit off your arm, which was having a watch, at that moment you would realize that was not the time to be petting an alligator, because a watch tells the time. See, you see what I'm saying? It's not the best connection. I get it, but it's something that comes out of the depths of my fucking mind, even if it's not amazing, and you pull it together and then you get something. And the good thing is, if you can take the skill set and then apply it to stuff that does make sense, like the markets, then hopefully it's more entertaining to listen to. So it's like that Jeb Bush meme, please clap. When no one claps, like, please clap. So yeah, that's how my mind works. That's it. That might cost you an Apple Watch. Oh, that was good. I missed that one. That might I wish I thought of that one, dude. That might cost you an Apple Watch. That is good. That is really, really, really good. For those that don't know, Lacoste is the brand with the alligator, and then Apple Watch. Oh, that would have, dude, I wish I thought of that. Yeah, that would have been a good one, dude. That would have been such a good one. See, and this motivates me to get even better at this stuff sometimes because it's good. You can come up with stuff on the spot. It's I guess verbal wordplay connecting to a niche. People can do this in music. People can do this in sports. I have picked the markets. And then it's a question of, is the audience willing to consume that? Do they get some value from it? Do they get some entertainment from it? And do they want to come back every day? Oh, by the way, now that you guys are here, let me show you guys this. And so that's the idea of it. So because you guys are here all the way till the end of the stream, this is the last thing I'll show, and then we'll end it out for today. Here's an analysis I've done on my market open and market close. So I've been tracking this stuff since January, and I finally finalized the doc last night. You guys can see this, right? Okay, so let me zoom in. This is the market close or the market open and market close statistics. So we have the date, the number of viewers. These are the peak number of viewers that actually were in the show. They're not the average number of viewers, just the peak. So how many did we get when it was at the highest momentum? The views basically 48 hours after the show, because after that, the YouTube video basically dies. And then the revenue. So if we take the average of it, I didn't do, let's just get rid of yesterday because we don't have 321. So let's get rid of that. I don't know how much money yesterday made. Let's just say it'll be $40. Let's just do an average on that. Okay, so we're going to do the averages right now. So how many do we have? We have, this is what, 55 minus 1. So 54. So the average number of viewers that show up to the show is 1,154 in the morning. 11:54 in the morning. Okay. The average number of views for the show after it's posted is 6,000. And then the average money it makes is $60. So again, when I said YouTube doesn't pay a lot, dude, $60 is it. Look, it's great to have $60, but as you can see, it's not like you're making hundreds and hundreds of dollars from these streams, right? So $60 is awesome, but the value is not the $60. The value is this number right here. Can we grow this top line number of 1154? Can we get that to 2,000 by the end of the year? That's the real value of the stream. And that's the exciting part of it, right? So that's what we have on the market open. And then the market close, it's a little bit lower. Again, let's get rid of the last 2 days because I don't have those numbers. So this is what, 51 minus 1, so 50. So let's do this divided by 50. Oh, that. So we have 765 on average that joined the market close, about 5,000 views on average. And then this was also about $59, about $60 as well in the market close. It's a little skewed because some of these days have been really good, like Palantir, earnings tend to be a little bit better. But in general, we're looking at 765 on that. So that's not too bad. And you guys will see more of the statistics soon when I do the Q1 earnings for this channel. This is a preview to it. But my goal right here is to increase this number. This is the main number. So the reason I bring this up is because, again, when you're doing a live show every day and you're trying to get people to come back, you're trying to find real product market fit. I think the verbal skills of being able to take something that's happening in real time and then immediately analyze it in a way that's enough for people to get value out of it. That is the real, can you prove longevity? That's why yesterday, people were congratulating for 30,000 subscribers. Look, that's awesome, dude. But this shit is very fickle. This business, which is media, is one of the most lucrative if you can survive, but it's also one of the most cutthroat competitive fucking businesses, dude. NVIDIA right now, wow, 931. Look at the left-hand side of my screen. The whole screen is red and then NVIDIA is green. People are buying up NVIDIA on a Friday. Incredible. So the business is very competitive. Media is, and I think this is the one thing that I think I got a lot of clarity on at the end of last year, beginning of this year. If you're going to try to compete in the media business, you've got to be ready to just dedicate yourself to being in the media business, because it's not something you can do on the side. You have to be all in. And you have to rigorously track your metrics to be able to see, is it working, right? And so this market open used to get 200, 300, a year and a half ago, so we 5x that. That's really good, but you need to keep it growing. You need to keep it exciting, keep it interesting, make it something that people actually want to come up to. And to do that, I think it takes a lot of different moving parts that I'm still trying to figure out. Definitely a better studio than this. This is we got to figure this thing out, because I think if it just looks more appealing, it'll be better. But also having some, verbal skills helps with that as well. Let us know when you teach the wheel strategy. I will keep you guys updated throughout teaching the wheel. Let's see. I mean, today, dude, is today a day to write some puts? Let's look at this. Look at SoFi, because this is the stock I'm looking at right now for wheeling. This one's down 1.6%. Okay, so let's do this live. Let's look at these live. And I'll update the tracker as well. I mean, I could probably do it right now. Emit trading tracker. Okay, so here we go. So let's look at SoFi. SoFi. Amit uses OCD in the stock market. Yeah, literally, dude. Literally. Okay, so sell, put, and we're going to do this thing for April 26, 35 days out. $6 is giving me 5 cents. That's not enough. 6.5 is giving me 13 cents. $7 is giving me 29 cents. Okay, I don't like those. Let's do April 19th. Do we get something better there? No, probably have to go a little bit later. May 3rd, 42 days. $6. Damn, this $6, this one should be, I'm trying to get $15 out of that one. That one's not good enough. 6.5 looks attractive. What's the delta on that? 25. You're looking for a delta between 0 and 30. So 25 is okay. But I mean, could SoFi go back to 6.5? Yeah, dude. SoFi could get tanked back to 6.5. I mean, these fucking analysts downgrading the stock every day. That one's a little scarier to do. So these don't look too attractive right now. It looked a little bit more. The $6 one looked attractive when SoFi was at like 7 because the premiums were better. But now that SoFi's at 7.30, the premiums don't look the best. The 21 days out, $6, yeah, it's giving you 2 cents. It's giving you nothing. There's like 0 premium there. Yeah, so none I would write on this one. But if I do write it again, I would, this is the tab. Everyone has access to this. If you don't, I'll put it in the chat. And this is literally the tracker, and you guys will see all the updates in that tracker. Amit, can you summarize what the wheel is? You are selling options versus buying options. So you are selling cash secured puts, collecting premium. If you get assigned those shares, you are then selling covered calls against those shares, collecting premium. And you are running a wheel because you sell the puts, you might get the shares, then you sell the covered calls, then you run the wheel over and over again. I know that might not make sense to a lot of people. We'll go over in depth later throughout the coming months. But that's the wheel in a nutshell. And you're trying to make, 3 to 4% on your money every 30 days. And if you're playing with a decent amount of money, you're doing it in a relatively low risk environment if you understand the stock you're running the wheel on and you know how to make sure you win regardless of if you get assigned the shares or you don't get assigned the shares based on the strategy you use. And it's less gambling because you're giving the options to the person who's stepping into the casino, which means your reward is significantly lower than the person who's taking the risk, but your risk is also lower. And if you're dealing with a decent amount of money, a couple $100,000, then you're still able to make a decent return. So we'll talk about it more later over the coming months. I don't want to get into it for an hour right now, but that is the basic concept. And that's what I'm planning to do 2025. I'm planning to, because I've been buying options for 2 years. And if everything ends up going well this year, we should have some money to work with to actually start selling options and make it a lot easier to get returns versus, hoping that a stock goes up so you can print on the options. That's why TJ does the wheel deal, correct? That's why TJ does the wheel deal. And TJ is working with a lot of money. So TJ is doing it very successfully. Me and TJ talk about it all the time. So that is actually one of my routes. It's the best way to actually make sustainable money in the market if you're not just going to buy and hold, because buying options at the end of the day, it is gambling. Now, I think it is strategic investments in certain companies where you think there is a hypothesis that can go well, and we've done that with some companies. But at the end of the day, market conditions can really mess up how some of these options play out. Which is why you got to find the right stock. You find the right stock, you find the right asymmetric bet, you get in really early, the market could tank at 30, 40%, you're still going to be up because you went in early, which is the whole benefit to doing it. So wheelers are the option market makers. Not really. The market makers are a totally different thing from the wheelers. The wheelers play a role in making the market, but an actual market maker is like a Citadel, right? It's a much more sophisticated company than an individual person running the wheel on an equity. Those are people that are participating in the broader market as well. Sounds fun to do. I don't have the confidence in myself, so all I'm doing is buying and holding. Yeah, so to me, the reason I'm making this trading tracker, and I have this Twitter account that I'll post here if anyone wants to follow it. I'm not posting on it yet, but the reason I'm doing it for the next 8 to 9 months is to figure out if I have the ability to actually do it. Because if I don't, then I'm just not going to do it. But if I'm fairly successful while I'm paper trading, I just sent you the regular Twitter website link. Here's the actual account. Then I think I'll start to do it. So I need to make sure I'm good at doing it, or at least I understand the strategy. And if I do by the end of the year, then 2025, I'll have a lot more confidence to do it. Obviously, when you're dealing with, more money, you got to see how you deal within those situations. But I think if I can paper trade it at least decently, then it's not going to be too bad. All right. I think that's it, folks. This was fun. I know 10 minutes of Q&A turned into an hour of Q&A because I can't stop fucking talking for some reason. But one thing I did not say is who I'm doing the interview with. So even though I have a big mouth, I did not reveal that. It will be revealed over the next week when we do the interview next Wednesday. And some of you guys got close, but no one really got close to guessing who it is. I don't know how many hints I have to give, but eventually you guys will figure out. All right, everybody. I'll see you guys back at 1 p.m. So we'll be back. I'm talking to Jose about the NVIDIA GTC conference. So we'll discuss everything about semiconductors. Then we'll be back for the market close 3:45, and we will be done for Friday. Thank you, everybody. Appreciate it. I'll see you guys in a little bit. Have a good one. Good night, everybody. Not good night, good morning. You know what I mean, but I'll see you in a bit. Bye.